We have another minute. Looks like we got a decent crowd this morning. Cool. Welcome, everybody. Good morning. Happy Scalpathon. We have great action this morning, unlike yesterday, where it was just a total disaster. We're going to do a little review, but first things first. What is the first thing you do when you arrive at your trading workstation? Quiz question. Who knows the answer to that one? Stick it in the chat, please. You can answer it in one word, and it's an acronym.
So I guess it's not cough your lungs out?
Nope.
Okay.
Sit on hands. That's actually not a bad one, but that's not what I was going for. The process of doing this, you're sitting on your hands. I need my Jeopardy music here. All right. Who remembers this? What does that mean?
Yes.
Stop, look, listen, smell. Smell is, obviously a metaphor, but the idea here is that, what's going on? So the first thing I do with respect to what's going on is I look at my far left panel because it's real easy to see what's going on. Everything is going down. And this is the value of having the TS trend indicator on this view. Again, I don't trade off this, but I can look at that left panel and immediately I know what? I know the market is trending. All four. And, correlation, we typically get good correlation overnight anyway. We've talked about that yesterday. But, we're correlated and trending perfectly. And yes, it's only a 1 minute time frame. On 5 minutes, we might not be. But that's, again, not the point. The point is that I can instantly understand what's going on. And even on a 5 minute, it's pretty clear. In fact, it's even clearer there. We were in ebb and flow. And then all of a sudden, there's been a whole lot of selling for some reason. And guess what? That some reason is why we're here this morning. This happens every night. This time. And I brought this up just to show you, once we get going in earnest in Frankfurt, which we did a couple hours ago, and London, which is just about to get started, the market gets reasonably predictable, given, predictable in quotes, but predictable within the notion of thinking in bets. And that's why we're here. Like right now, look what's happening. So let's go back to 1 minute. So our first sense is, okay, the market broke down off a price level and now it's trending down to some extent. And then if I look over on the liquidity map over here, I see, okay, we've come down to a spot where there's a whole lot of liquidity underneath us. And, somebody stepped up right there, right under where we're trading. But, look how aggressively we came down to this area. So just by looking at those two things, I immediately understand what's going on right now. The market hit an inflection point up at 50. It got sold really aggressively. And now there seems to be some buyers under the market, but so far it has yet to find a solid bottom. We're in ebb and flow down here at the lows, trying to figure out what we're going to do next. Cool. That's all we need to know right now. So that covers the indexes. Next up, oil. Oil's always busy this time of night, so I just flip to it. And oil has a bid under it. Surprise, surprise. Again, this has been a tricky one to trade because it's been all over the place. But that's worth noting. And the other thing I have this over on my other screen, and I refer to this, but you guys need to know we can see it. What's going on? Oil's up 3.3%. Everything else in the index world is down 0.5 to 0.75%. And that's interesting. That's bringing us back to some levels that were in play yesterday. And so that's cool. All right, so that's oil. What's happening in gold? Gold has a bit under it too. Again, I'm finding gold isn't very tradable in the futures. This looks like a decent trend. The problem with that is, look how wicked thin it is in some of those spots. Trying to get into that trade or get out of it with your profits could be really hard. I've seen gold move really fast within this type of action. So again, I do trade the gold futures and I do scalp them. And I want to give you guys examples of that for this Scalpathon. But having said that, we need to all understand that conditions this week, we got really lucky in a way. We've got really good conditions because they're difficult and they're active, volatile. At the same time, certain things are just not the normal overnight gold and oil trades, which are momentum trades, aren't going to happen because gold and oil are both in price discovery. So it's just really important to keep that in mind within the framework of this course. We're getting some unusual circumstances, so please keep that in mind with respect to the examples we're talking about and what I can and cannot show you happening. Okay, second half of this introduction part is I want to do a quick review. So if you have any questions on this, please jump in because, again, the idea when I first sit down is stop, look, listen, smell. The other thing I'll do is I'll put up a 30-minute footprint and see what's been going on there. But I already know because I saw it on the liquidity. There's the 30-minute footprint. We came down really aggressively off of that break of 50, which happened to be an initial balance high from yesterday. Hello, hello, hello. There's your old levels coming into play. It took that out really hard, settled in the middle, but it left you be right there at the low. So structurally, we definitely have likelihood of going down. But the problem with this type of setup overnight is, if this liquidity is real down here, it may battle it. Well, it's testing it right now as we're talking. So let's jump out of the introduction and go to what's happening right now. That the liquidity that I mentioned at 40 is being challenged. So this is where, Brent, you asked me about this yesterday. We are at the edge of a range. You do not assume we're going back into the range 96% here. You assume we're at a spot where 96% of the time something will happen, and it's happening right now. This edge is getting challenged. The liquidity is getting eaten up and we're pushing down. So this is the kind of setup you either want to be short into or you don't want to trade. It's HMOMO. So the first question with HMOMO is what? Do we want to join it? Do I want to join this here? No. I could have shorted it off of 40, but it's trading into liquidity. And look at that. You're going to get bounces. It's almost like this could be a better long scalp than a short. So it's really important to get wired into that as it's happening. Look at what it did. It pushed the boundary of the range, and then it went back to the range. This is the problem with just assuming that you trade one side of the range or the other. You have to let whatever's happening play out. And the reason that we have the range is because this is exactly what's been happening over and over again. We push the edge of it and then we drift back in, but the net is we're drifting down. And that's what the 1 minute here is telling us. So these are really good conditions, but getting a good trade-off under these conditions is going to require, number one, what we just did, just, what's the context really clearly? What's happening right now? Pushing down into liquidity. So dangerous spot, but it's an opportunity. We could play this either way. Okay. Number two, do we have enough information yet? One of the things I really like to do when I'm trading overnight, I've been up since midnight drinking coffee since then, and I'm just starting to get dialed into what I'm seeing here. And that's really important. You just kind of watch it and focus on the price action. And what does that mean? I posted some things in your pit stream yesterday just to kind of review and to give you kind of key points. Set up bullet points, this little piece right here. Let's make that bigger. And sorry, it looks like code. I just pasted it in there and it came up that way. But HMOMO, we've got HMOMO right now. Do we want to join it or sit on our hands? Well, it's actually, let me be clear. We had HMOMO. We just went into ebb and flow down here into this liquidity again. And, it's really clear what's happening. The market is selling into the liquidity and it's taking it out. But there's no clear edge right now because, we can easily bounce back to 45 or 50 as this happens. You can see there's a reasonable amount of players down here looking to buy the low, but they're not doing it right on the low. They're letting the low break, which is classic. There's your ledge break again. 99% of the time, those will happen. And then the buyers are saying, okay, good time. I'll step in here. I can grab 3-4 ticks here, which is exactly what I would be thinking if I were them. You see that? So that's we're getting these bursts of HMOMO into ebb and flow. And this is why you just don't want to join momentum. It can work against you really fast. And that gets us to the topic of ranges. I put this ranges coming next. That's what we're going to talk about today within the context of this action. But I really want you to stay focused on these things that we did yesterday. We are at a ledge right now, and it is breaking. It's breaking very slowly and surely into this liquidity. So this is a classic example of a short that's really hard to enter because you got to find a spot to lean on. And at the moment, there really isn't a good one. It's just picking its way down through that. So, this is the kind of momentum that you could join it, but, you're setting yourself up to be off sides because at some point, each time we push down, the buyers step back up. And so if you're going to short it, you got to find a spot higher up where you can lean down toward this. Just playing the edge here if you're really skilled, you can pick up ticks, but it's hard. I got to tell you. So So stay focused on the fact that we have this HMOMO. It's kind of ebbing and flowing into the HMOMO. And that's really useful. That's going to be really tradable throughout the morning. It's just right now at this spot, as it's pushing the lows with all this liquidity, it's just not a great spot to play. So continuing or likely to, yeah, it's probably going to continue, but it's going to do it in bursts, and that's going to be tricky. Are there nearby IPs right now? Yeah, we're sitting right on one, which is the ledge. It's below the session. So, this is a very tricky spot to play all the time, and particularly in the overnight. In the regular trading hours, I'd play this completely differently because you have much more energy. At night, what happens is we get bursts of energy like you saw right here, and then it goes into a ebb and flow, and it gets quiet, and people kind of get calm and suckered in again, and then we get another burst of energy. And think about it. Why would this be happening? We don't worry about the why that much. We worry about, how is it impacting price? But this one, from a psychological point of view, is important to understand. What's happening here is overnight, the volume is low, the book is thin, but there are people that will want to play. And so they have to think very carefully about where they choose to play and with how much size. So if you look right now, the volume is only 172,000 contracts since 5 o'clock Central last night. That's nothing. So if you're trading even a 100 lot kind of a book, and a lot of institutions trade 1,000 lot books, you got to be really careful where you choose to play. And so what we're seeing is exactly that. Anybody that's trading any sort of size is going to be really, really particular. And if we can kind of get a sense as to where that energy is, that's the key to getting good scalps off. So right now, ebb and flow at the low, and there's buyers down here. We have a clear trend down. There's no doubt about that. It's, very, very clear. But when it goes into this ebb and flow, it will suck people in that are buying the bottom, and then it will push down. And then as it pushes down, the people that get stopped out of buying the bottom will sell to people that are really buying the bottom. And those are the guys that are controlling the tape right now. So it is useful. A couple of you asked me about this yesterday. It is useful to look at the min-max at this time of day. You just have to understand that structure's just not as strong of a framework in overnights. It's much more price action related because, again, lots of reasons, but the main reason is the market profile structural thing really wasn't designed for 24-hour markets. It was designed for statistical chunks of regular trading hours. So at night, a grain of salt. But right now we're upside down. Min-max is backwards, and we're below max. So, again, don't get stuck interpreting those things. But what is useful is on the last rotation, right up there at 45, there's a really clean price rejector. And we've seen this over and over again. We get these ebb and flows, and then it breaks down, ebb and flow, break down. And so, if you're doing anything right now, you got to be thinking short, or again, you're a price action scalper. So it's either short or right what we just saw, catching the spots where longs are just overwhelmingly likely to give you a couple of ticks. And there's one right now. There's a cool little battle going. Let's reset this and watch it, because this is the spot. See the liquidity stepping up right here? It got eaten into a little bit, and now they're getting much more aggressive as they're filling up the bid side, and that's going to push us up. It just pushes us up. There's 6 ticks. And just by being tuned into that, you can get in the rhythm of how we're trading. So, if you were looking to get short, this would be a spot to start thinking about it up here. And if you were looking to scalp long a couple of ticks here, that would have been a perfect spot, because it was really clear that, that ebb and flow is temporarily going to hold. It may not now. Now it looks like it wants to go down more. Are you guys getting the sense of this? It's actually pretty easy to get into the rhythm. If you forget what price level we're at, it doesn't matter. I'm not reading the numbers over here at all. I'm just watching the trade back and forth. And, this pattern is happening over and over again. We go into ebb and flow, and then we chew down some liquidity, and then we take out a couple of shorts, and then we chew up some more liquidity. Is everybody seeing that? Questions about that? Seems to move on the half hour, Donna says. That's a good question point. Yes and no. Here's the deal on the half hour thing. There are significant amounts of players that trade on 5-minute and 30-minute periods. And so every time there's a half hour, we're getting a new period in the market profile. So yes, that will create a little bit of energy. Having said that, semicolon, my point of view is it's best to let that happen and then see how that impacted what was happening up till that point. So it's a really good spot to pause and let the context fill in a little bit. So good point. Yes. Let's see, Jan, good morning. Questions. Those ledge breaks, they happen with 99% probability. Okay, again, you keep playing with me on this one. I'm going to stop there. They happen with 99% probability under the three conditions that I explained about 17 times yesterday. I don't want to beat this as a dead horse, but ledge breaks, these are the keys. And if those three conditions are true, it is my experience based on live trades, literally hundreds of thousands of them, that it's about 99%. Let's not get married to that and let's stop talking about that, please, because it's way too much math focus instead of the action focus. Having said that, let me read the rest of your question. How many ticks can you expect it to break? You never know, Jan. It's different every single time it breaks. You have to understand here, this is not a maths question. It's a combination of a maths question, the supply and demand at the ledge break, and then it's a human reaction to that that's not predictable with statistics. So what you do is you watch it 1,000 times, and then you watch it 10,000 times. And after you do that, you start to just get a sense, like I did yesterday when I showed that example where, okay, if we break here, we'll probably trade down to 20. One way to do that is just look at the quarters. We tend to respect quarters, particularly overnight. The quarters being 30, 32, 35, 7.5. Okay. And so that's part of it. And the other part of it, I've explained this a bunch of times, and you guys always just kind of, oh yeah, okay. And nobody ever listens to this. So I'm gonna soapbox on this one for a minute. This is critical stuff that I keep explaining and nobody's listening to. What's important is if the session right now, and the session range is, actually it's quite small given what we've had lately, it's 64. So from the top to the bottom right now is 64 handles. I can't draw with my mouse very well. That's a 64. So this distance, okay, 64. Now, what's going on right now? We have 39, 33. So we're at the bottom and it's 6. That is a good ratio. We have lots of room to play. We can break and move in and out of the range, and there's plenty of room to do it. That is a very different situation than on normal days, quote unquote normal. We haven't seen much of that lately, but statistically normal. What happens is the range is much smaller. It might be 40. And throughout the day, the short-term range, the LRC range that we're watching, at the edges, it might be 2 or 3, and then other times of the day, it might be 10 as we're moving around in the range. And 10 out of 40 is just way too unclear. You're in the middle in a big chunk of the day. But if we were down here and we had like a 2 or 3 point range in that 40, okay, that's a spot we can play, because either way, it's going to be really obvious if it's working or not. So I really have to push this point, because you can't, statistics in trading, metrics in trading, all of the probabilities and all of the thinking and bet stuff that we do, those are all just about. Think of the word about, approximate, because all we're doing is we're getting an edge. And the idea of an edge, which is critical, is can we predict something better than 50-50? If we can, then over time, we should be able to make money with it if we can execute against it. So really, really important, when we quote statistics, and I know the furu world out on the internet loves to talk about, the statistics that they have on their trading systems and all that, and it's all bullshit. This is based on discretionary execution. So those things are guidelines. And I cannot emphasize this strongly enough, because a lot of people get stuck on this, particularly people that are trying to trade, reasonably mathematically, which is a good goal. But it's critical to understand that there's a huge human component here that makes the math nothing but a suggestion. And that's the way you have to think about it. Okay, now I'm going to read the rest of your question. Okay, so if you take all of those pieces, Jan, into account at each given ledge break, you'll have a decent idea. Like right now, if we were to go down and break the ledge, I would say, based on the range and based on this volatility, that we're not going to break it by much. We'd probably break it by to the next nearest quarter. So look, the ledge is 34 and a quarter. I would say the first place to play is 32 and a half, and then maybe 30, because we're not very volatile. But if it was yesterday, I would have said 20, because we were moving so much that picking spots, you had to be much more conservative. And that even happened yesterday. I picked spots and I missed by 2-3 ticks after, a 12 tick puncture of the ledge. And, you never get it exactly right. You just get good at getting a feel for it. And that's what your objective is. Don't try to get it so mathematical that all that will do is cloud your ability to read it as it's happening, in my experience. Okay, let's see. A few ticks. Jonathan makes a great point. A few ticks is always the goal. Remember, there's two things going on here. There's what is the odds, what is the risk, what are the statistics that the move that we're going for could happen. Remember, it's this money risk versus information risk that we talk about. There's a lot of times where information risk is pretty unclear. You don't know exactly what's happening, but at any given spot that you can game it, where you can make a couple of ticks without taking extraordinary risk, because it's really obvious where you're wrong. Hopefully that's making sense. All right, now I see some follow-ups. But you are expecting a breakout and the initiation of a trend no, I never said that at all. It's not the initiation of a trend when a ledge break happens. Ledge breaks and trends have nothing whatsoever to do with each other. A trend is directional trading over time, and it's the most misused thing in trading. For example, right now we have a trend down. Is that useful to execute against? Yes. Is it a system? No. You get slaughtered just trying to be short in this. Why? Because the pops up are pretty aggressive and it's holding the trend. But again, that's just a random way of measuring the trend on a 1 minute. If I put this on a 5 minute, it's going to look different. If I let's look at 3 minutes just for fun. A typical trend following system would be on a 3 to 5 minute view. And look at this. Look how far away. Like right now, you'd have to be short from 48. 48's where you're wrong, and we're trading 42. Who wants to take 6 handles of risk on a quote unquote trend move right now? So it's really important to understand context. Yes, we are going down, but look at this bounce we just had. Let me blow that up, okay? So we had wicks down here at the low. We took out the ledge at 34 and change, and now we're back at 41. That's not manageable risk to stay short and quote unquote trade a trend. It's not possible, but there's 100,000 people on the internet that'll sell you a trend following system to do that, which is totally useless. You don't need anything to see that. You just, a 1 minute chart, you don't even need the line on it to see that action. So that's my first reaction to that. It's not the initiation of a trend. It's a breakout of a level. And they almost always retrace right away because of the nature of the breakout. Think about what's happening here at the bottom. If a ledge is at the low, okay, so let's say we're looking at this one we just broke down here at the low in the 35, 34, okay, that area. What's happening when we get down there is a lot of people are saying, oh, that's the low of the session. I'm going to buy it, because they're thinking, it'll go back into the range. And so the reason ledges break under the conditions I described, Jan, is that those people are easy to run over. If I'm watching a bunch of people buying 35 or 34 and a half, thinking the low is going to hold, all I got to do is push it 3-4 ticks and everybody stops out, and then I can buy. And if I'm big enough to do that, that's a very, very popular strategy to take out small traders. And you see that a lot. You'll see somebody put a bunch of liquidity down below the market, maybe at 30 or 31, and then it gets anywhere near the lows, which is why that ledge break, those criteria work. And as soon as it does, everyone just says, okay, let's take these guys out, and boom. It's not like cooperation. It's just like, it's the smart thing to do if you're trading at that spot, which is why we see those pukes over and over again of accumulation at the lows. So it's really important to understand that. It's we're all we're expecting is that event's going to happen, that it's going to puke, and then once everybody that is weak is puked, the other stronger people are going to suck it up, and we're going to move back. That's the dynamic that you're trading. Hopefully that makes sense. Okay. Yes, there is UB. Yeah, we'll talk a lot more about structure, but we were before the session started. We were talking about that. This is a very interesting. We have UB at the lows and a price rejector on the last rotation. This is a very interesting structural setup. But now that we've all seen that and talked about it, I'm going to say let's not worry about it for now, because again, I have to emphasize, don't marry structure overnight. Yeah, we have UB down there, but that UB could stay for 2 weeks. The overnight is much more about price action patterns. People are not looking at things like structure as being as important, because they're not. Okay, let's see. Okay, cool. Jan, thank you for the follow-up. Okay, so Jeff, if you get a good 2 or 3 ticks, you can use side. Exactly. If you get good at this ledge break trade, when the conditions are like this and they're relatively quiet, let's say we're heading down there to that 34, 35, this area down here. There's no high volume nodes anywhere near there. It's really thin. I mean, look at the volume. The high volume nodes are all the way up in the 60s, and there's one at 50, right? So if it gets anywhere down here and starts getting momentum, that ledge is going to go. And so the trick is just to go with it, but not expect it to be the beginning of a trend, John. That's where you're wrong. What it is, it's a takeout of people that are weakly buying the low. They're buying the low with weak hands. Let's say it that way better. And that pattern repeats itself over and over again. Okay, so that's good review. Let's go back to this real quickly. So if HMOMO and high volume reversals, we'll see a lot of those overnight, and we'll see a lot of ledge breaks, particularly when we're sitting right on them like we are now. But those are really visual, predictable patterns, and they're really tradable. You just got to practice them. But what I want to talk more about today, because we actually have a decent range, is ranges. Because ranges are the gold mine of scalping. Why? Because if a range is relatively predictable, if the market's trading in predictable pattern, then that gives you the ability to scale up and trade more contracts with less dollar risk because of the predictability. If the market is moving really, really large ranges, there's a lot of opportunity in momentum trades, but trading ranges is really dangerous because the ranges are so big. Does everybody get that? That's why yesterday I totally was conservative and I shut down any sort of attempt to get quick scalps or take range trades because the ranges were just huge. We don't have that today. Today we're getting much back into quote unquote normalness. And so we want to look at ranges. So this is a perfect day to do that. And I'm watching gold and oil, guys, on my other screens. I don't want to confuse us with too many pieces. The session today is the midnight oil trade, which isn't necessarily about oil. It's just this time of day. Oh, look at that. We just had a big push down off of high volume. And looks like we might get a ledge break here. And I may do this too. I may start a subject and then immediately go to live trading to take advantage of something happening. So bear with us on that one. I'm watching to see if there's a ledge break short we could trade here or a long. Here's my take right now. Given what we're seeing, I don't want to trade the short break of the ledge. I want to go ahead and let it break and see all this liquidity down here. I'm with them. So if I'm going to buy this, I'm looking to buy it here and here, and right in that liquidity somewhere. I want to see, it'll probably chew through some of that, and then the buyers will probably step up. We see that over and over again. So that's a spot. Sorry, I just spilled something on my keyboard. All right. Anyway, so that's a good spot. And that's a kind of strategy to play it. I'm not just going to leave those orders sitting in there, but that's an example of what I'm talking about. So this is a real cool setup, but see, look at how much volatility you can have within the range. We just traded down to 36.25, and then in a blip back to 39.25. So you have to really choose your spots carefully and really zoom in on the price action and to get this range stuff right. So let's look at what's happening. This is 15 seconds. And the reason I love 15 seconds is, we have a really clear trend with really clear Wyckofian behavior. We have, every move up is sold. Sometimes they make higher highs, but they get sold anyway. And so, the farther out you go, the cleaner that trend would look. On 15 seconds, it doesn't look quite as clean, but even on 1 minute, look at that. It's almost perfect. All of these little up thrusts and bigger moves down. So the context is pretty clear of what's happening. And so given that, how do we want to trade this? Well, again, I see two opportunities here. I see trading the ledge breaks and going with them. And given the kind of momentum we have right now, I like the idea of fading the ledge breaks better. So let a ledge break go and then, buy it with the liquidity. Like I was just saying, we might be about to get that trade. Let's see here. So where are the ledges at 34 and a quarter? We're at 36 and a quarter. We're close enough. We don't have a high volume node in the way. What's the problem with this trade right now as a ledge break setup? Anybody in the chat? Nobody? Momentum. Yes, or the lack thereof. Yeah, we're not going down very fast. We could go down really suddenly once we get closer, but if you're sitting in this short, your risk is at least 40, and we're at 36. So that's a 4-point risk, and that's what it is. It just happened. We just popped up to 38 and a half just in a second, because it's just too easy to take those people out. And so what you want to do is you want to get the high odds chunk of the event, and the high odds chunk of this event is either going to be the break, or given all this liquidity down here, it's probably going to be buying the break, because we just don't have a lot of momentum going down. Look at the range right now. We're pretty much in ebb and flow. We just have these little bursts taking out the lows, and then we go back into ebb and flow. So this is a real good spot to be looking for a long on the break, not a short. Does everybody get that? That's the price action's just screaming that you have an opportunity to buy a good low here. And I'm not saying, oh, it's absolutely going to go up. What I'm saying is, if I can get long down here in the low 30s, it's really asymmetric. If I'm wrong, it'll be really obvious. And, so my information risk, I really don't know what's going to happen, but monetarily, I'm either going to make money or lose very little getting out of the way. So that's how I think about these as they're happening. And here it comes. This is going to be a weak ledge break is my interpretation. It has, and Brent nailed it. It doesn't have enough momentum, and see, it bursts. Okay, here it goes. Let's see if we can buy this. All right. I just bought 32.75, and just for demonstration purposes, let's see if we can catch 3-4 ticks here, just as an example. And again, I'm not trying to make a lot of money here. I'm trying to demonstrate technique, and we got it. Any questions? I'm taking a break while you digest that and ask me about questions. Okay, Waleed, please don't do what you're doing right now. I'm happy you got a 5-point short and that you're out now, but I'm explaining why this is a short trade, but it's actually a more intelligent long trade right now. It's great that you get 5 points, but you're not listening to the technique. You're trading, and that's what you shouldn't be doing right now, okay? This is a key point. I mentioned this at the orientation. I'm not trying to make money with everyone in the class. I'm trying to teach you how, after you leave the class, you can learn how to make money on this. And trading short here is not a bad idea, again, if you've got a good entry. But that's not what I'm talking about right now, okay? So please respect that. Okay, I don't see any questions about that. Okay, and here's the reason I'm saying this, Waleed, is my trade had overwhelmingly high odds of working. You made more money, but you had far more risk than I did. You understand that? And that's a critical part of the equation. Please let me know if you understand that, because that's a key point. That's the point I'm trying to make to you. Okay, now that it broke, we'll go to the next level of liquidity. Not necessarily, Alfredo, but that's a really good question. What happens, again, think about the ebb and flow of this. God, that's a good question. So it's come down and it's taken out that liquidity. And now look at, we're litigating that spot. So now that we've taken that all out, so those people that were buying, bought, and some people have sold. And so we're in price discovery down here at the lows. And I had a real high odds opportunity to catch that long there. And I did, got my ticks. But now, anything could happen, because yeah, there's liquidity below us. And we're seeing these little pushes down, but we're also seeing, buyers push it right back up. So, if I had to just pick a direction here, I'd say this is still a short, obviously. But the danger of just staying short in a move like this overnight is, in a heartbeat, we could be back at 50. We see that over and over again. And right now, this downside energy looks convincing, but remember the context of it. Europe, just getting going in the most important parts of it, London, Frankfurt, it's early in the morning there. And so people are just coming online. So this is the point I'm cautioning you against, and it's a really important one. Thinking in terms of trend moves like that during the overnight can be very dangerous. You can get great trend moves, but you have to be in them in very, very good entries. And this kind of action is giving you good spots to enter, which is in the ebb and flows. But the danger of doing that, there's one really, really visual example on here. Let me grab a drawing tool here and show it to you guys. Okay, let's see. Let's get yellow and draw. Okay, so this is a perfect example of why that strategy is a really bad idea. Because on one, this is a 15-second bar here, 5-second bar, excuse me. On 5 seconds, we had absorption by liquidity under us. We broke down and went back up all in one move. And the top of that was at 40, was that about 42.5? And the bottom of that is 37.5. And that was a back and forth. So you could have been right, been profitable, and gone to a loss all in a heartbeat without taking profits in there. That's the danger of sitting on one side of this direction or not. And what I'm trying to teach you guys, and the point I'm trying to make here, is that you're much better off under nighttime conditions looking for real high odds and go into them with more size. So the trade I just did, don't do it with a 1, do it with 5, and grab your ticks and get right back out. Remember, anytime you're in the market, you're at risk. And the other thing I want to caution you not to do is to judge your trades by the results. That's called resulting, and that is a really, really bad idea, because there's too many random factors involved as to whether you make a profit or not on any given trade. What's more important to track is the thinking of the idea and how they play out in groups over hundreds of trades, thousands of trades, months, years. That's how you should measure that. Not just, well, I was short there and it worked. Don't think that way. It's just very, very dangerous. Look at the bounce we just had, by the way, off of much less liquidity. So this is a really good example here too. We chewed through that liquidity, but now, there's not a lot of it under the market, yet we're right back above that level. So you could interpret that as, whoever's buying here is reasonably strong because the pushes down are holding, and, liquidity is not coming up under us yet, but we took that 30 out and immediately moved back into the ebb and flow range we took it out from. So in the very short term here, this is actually a long setup. I'm not going to take it. I just want to describe it. But this low has held, and it's a really good spot to trap a whole lot of shorts. Certainly back from here to 40 could do that. And so that's the psychology of these ledge break trades. You want to let the people that are going to get stopped out, let it happen, and then be one of the stronger players coming in at a more intelligent spot when everybody weak has washed out. That's the psychology of trading this. And it's important to keep that in mind. Okay, let's see. Okay, I answered that one. Yeah, it does, Elena. And if you think about it, if you think about that psychology, it makes total sense. The ledge is the low, and there's always going to be people buying the low. That's just human nature, buy low, sell high. And if you can give it a big enough shove and those guys say, oh my God, I'm wrong, and they stop out, that's the opportunity when that happens. That's where the true buy is. And that's one of the reasons that paying attention to structure for ledge break trades, like whether there's UB or there or not, is really a waste of time, because the UB could be there or not, and we could still see that behavior that I just described. If we have UB and it's regular trading hours, that makes the trade a better idea. It adds value. It's more likely to happen given that particular context. But don't use that as a trigger for this trade. Remember, I'm trying to give you guys really simple mechanical ways of just being able to jump in and make ticks. And for ledge breaks, it's these 3 things. Don't overthink it. That makes it work. You don't need more than that. Okay, let's go back to ranges, because this is a good morning for ranges. Notice how this 30 area is holding. It's doing it, it almost feels like by its fingernails, but it is holding on, and that is telling. The liquidity may or may not be underneath us, but is this level breaking down? I don't know. It seems like there's a stealthy bid down here. And so that's why, if you're thinking I'm going to short for the ledge break, this is probably not a good spot, even though we have this directional, quote unquote, trending, behavior. This spot, I don't know. It's a tricky spot. You could make money both ways. So don't just get married to, okay, we're going down, so I'm going to short pops up. Because right about the time you get really a good, strong conviction on that idea is the time we're going to pop back up to the 40s. And anyway, let's see. The other thing to keep in mind, I want to give you guys just as much information as possible and let you digest it on your own schedule. Economic stuff coming out in other markets. Ooh, we just broke the ledge again and it got bought again. Look at that. So you could have, again, on that one, you could have made 5 ticks right there instantly. And that's the beauty of that. You make it your money right away and you get right back out rather than trying to sit in the short breakdown of this ledge. And that's important. The less time you're in the market, the less time the market can go against you. That's a real consideration. Don't discount that. Okay, the other thing, it's important to watch in different parts of the world. There are economic numbers coming out, and there's a few oddball things coming out in the US, but this morning there's not much worldwide. But that is something I'm watching on my other monitor. I do keep a calendar of worldwide economic events, because that's one thing about trading overnights is that, a number will come out in, France or in Germany or whatever, and you're not totally dialed into that. And it can, short term, in the very short term, it can affect our tape just as a reaction to it. But it often, just like a ledge break, it often creates a good opportunity for a trade after that, initial impact. Okay, so again, the topic this morning within the idea of the midnight oil trading is ranges. And look at our range here. It's interesting. In the very short term, the market is behaving very, very predictably in the ranges. We're having the ledges are breaking on the downside and then they're getting bought. So how much are they breaking by? Jan asked me about this, and it's really hard to game that. But what we can see is that once they break, there's a real good opportunity to scalp long. And so that's the real predictable trade right now. And I know that's counterintuitive, but if you do it precisely, that's how you can get, 100 winners in a row, because the odds on that trade are just so good. You just can't marry the price, and you can't try to get 20 points. Just go in, grab your ticks, and get right back out. Or do it with a 2-lot and grab ticks right away and then leave a runner if you think it's going to run. This looks like it could pop up right now. It's in that position where we could trap some shorts right here. Let's watch that. We had that radical push down here that got bought. And again, so there's potentially shorts offside here, and all you got to do is lift the ass to trap them, and that's what's going on. Whoever was shorting this and selling into that is now significantly offsides, and the ask is getting lifted, and those people are stopping out. That's why this is a long. Does everybody get that? Does anybody not get that? Can I elaborate on that more? Again, this is pure price action scalping. We're not concerning ourselves with the structure and what's going on with unfinished business and all. We're just looking at how the ebb and flows become sudden high momentum events, where it's occurring, and is there a sweet spot over and over again? And yes, there is. It's not at the same price, but it's at the same reaction to the break. Does everybody get that? Look at now that they are just peeling shorts apart here. Look at that. These 2 5-second bars, we went from 33 to 35 and a half. And you can just watch the shorts stopping out because everybody was trying to short this trend, and there's no trend there. It's liquidity playing at the bottom of the range. The shorts are puking, Brent. That is exactly correct. And this happens over and over again. Okay, now we're back at the other end of the range. So this is a spot, not necessarily that 96% of the time we're going to go back in the range. 96% of the time, something's likely to happen here. And it is. The sellers have stepped back up. So will this hold? Probably not. It looks like the buyers are more aggressive right now. Probably going to trap some more shorts, but it's the exact last peak we were at. So very interesting spot to play. And so let's just watch it. You can see as it plays out what's happening. You can see right now the longs are in control. People that are short are nervous. If I'm short, I'm nervous right now. If I'm long, I'm like, yeah, we're gonna trap these guys. We already got them. So just put yourself in the people that are in this trade's head, And this is a long. This is a long for that edge of the range, and there it goes. And could it become a high volume reversal up here? Yeah, it could. It's setting up for that potentially. We've got decent momentum going up. We're right on the edge of the range. But so far, the buyers are running the show here. Look at the delta. Which side's winning? Ever since this big push down, which side is dominant here? It's almost all blue. Why? Because the ask is getting lifted up, and people that are buying are having to go to the ask and then push it up, and they're chasing it up. This is what trap shorts look like. This is what the trend traders who are trying to trade this downtrend, they are now getting stopped out very aggressively. And this happens over and over again. And it's very important, if you're going to dial into this, to dial in only to the price action. Don't combine it with anything else. And don't think that structure will save you during the night. It won't. Structure is very ambiguous at night. Okay. Yeah. And now there's shorts for the move up. And by the way, we are also setting up for another spot for a good short. Remember I said, watch, we'll get back up to 40. Well, here we are. We're right back up at 40 where it got sold aggressively from. That doesn't mean you short here. It means this is a great spot to watch the action. So, look at the 1 minute here. And so, we broke the trend. There wasn't really a trend, but it was just a, burst down, ebb and flow, burst down, ebb and flow. You could have shorted this during regular trading hours. I would have shorted that much more aggressively. But whenever it's doing that at ledges, I'm much more comfortable just picking off a couple of ticks each time it does it the other way, because I'm going with the people that are freaking out. They're selling to me and I'm buying from them. And that's what you want to do. When you're buying, you want there to be hundreds of sellers. So all the guys puking out that are trying to buy, I want to be happy to sell to them. Hopefully that makes some sense. Okay. So you can see the 41 area now is being litigated, and we've taken out 40 pretty aggressively. And see how the liquidity steps up when that happens? There's a big chunk of liquidity now here at 39.5, and that's going to be a magnet. We'll probably trade down to that. Maybe that's his intention. Maybe that's somebody looking to get long. Who knows? But the liquidity is helping tell the story here if you don't read too much into it. Okay, let's see. Let me go back to the comments. I'm reading your comment, Elena. What should we see when it is not valid anymore? Yeah, what you'll see is we'll go into ebb and flow, and the lows will hold. And that's useful to look at on footprints because you can see the demand underneath us, like right here. And that's relatively new. If you look at, now let's blow this one up just for, these always come out distorted when I blow them up, but this one's not too bad. We just crunch it a little bit. So you can see, this is that quote unquote trend down move we had, and it came down into liquidity over and over again. We kept seeing that. It would chew the liquidity up just for a couple of minutes. And then, that demand would reassert itself and we'd go up. And now we're seeing demand under the market. And so this behavior has stopped, and now we're building a range here. And again, this is very typical for the time of the day because we're getting closer and closer to the open. And I'm going to talk about this a lot more in the next session that we have today. But the behavior is definitely changing. But just look at the buying that came in once we kind of nibbled our way through some of the demand that was under us. Very typical. And again, I want to call your attention over and over to this. This is the key to seeing it happen as it's happening. Right here. Hang on, I'm getting a drawing tool. The key to this is to look at the deltas on a fast view. From this point forward until right here, the picture was overwhelming. I mean, this is the shorts getting trapped right here. You can see the shorts puking out. They got trapped right here when oh, God, the low's breaking, let's get short. Nope. And this happens over and over again. So the last event was right there. And now from this point forward, now we're starting to see some more action on the other side of the tape. So that trade ended right there. Not hard to see this. If you don't overcomplicate it. It's a really simple story. The market is telling you literally trade by trade what's going on. If you ignore price levels and you think just purely in terms of the price action, it's pretty easy to get dialed into it, in my experience. Okay, let's see. So ledge breaks are mostly stops getting triggered. That's part of it. It's It's the psychology. I think the simplest way to understand it, Jan, is it's the psychology of people that can afford to play with more money, stronger hands, versus weak handed speculators that are undercapitalized. If I'm buying that low and it breaks, I'm immediately going to cover, and so that's very predictable. But for people playing with bigger books, again, this is my point, and I don't want to use the big boys are doing this or that, but think about it. If you're my hedge fund buddy friends, it's about predictability. And this is why I jumped on Waleed so much. The predictable trade here was not being short. It was that these lows are getting bought. And yeah, it was going down, so you could be short again. But the thing we're looking for is overwhelmingly high odds events. And if whether it's people getting stopped out of shorts or it's just the normal behavior of how a bottom is created, it results in a very predictable ability to grab some ticks. And again, the point I'm making about these range trades is when it's quiet like this and the range is relatively predictable, that's when you can go in with a lot of size because your risk is low. So I'd much rather go in on that event where it breaks the low and I can grab a couple of ticks and go in with a 10 lot, grab my 3 ticks, get out 4 seconds later with a bunch of money, than sitting in a short that's ebbing and flowing on its way down. That's the point I'm trying to make. So you want to trade the high odds events, which in each one of these cases where the ledge breaks. And you could have traded those short too, again, but the odds were actually in your favor on the long side. Now, during regular trading hours, a very good strategy with ledge breaks is put stops in, and when they go, have the stop take you into the trade. That works really well. We've talked about that in live sessions a bunch of times. But in the overnight sessions, I don't do that because there's rarely any follow through on a ledge break. They almost always get bought, at least in the very short term, or sold, depending on which way we're going. Okay, great questions, guys. Good questions. Okay, so can we interpret the big delta as absorption at that level of demand? Yeah, you can interpret it that way. We never know on the big giant deltas if it's somebody closing or opening a position, but I have a very simple way of looking at stuff like deltas and max delta, min delta, and absorption. If it's on my side of the trade, then that's a good thing. So what you just said would be on my side of the trade. It would be something in my favor, and yeah, absolutely, I would look at that. But it wouldn't be the thing that I would choose to make the trade based on. We've seen a bunch of examples where price action can temporarily overcome structure and it can temporarily overcome liquidity, like right here. It plowed right through it and then came right back to the liquidity. And what that's telling you is that the liquidity is right. And a bunch of short-termers got stopped out, shorting that, and then they got stopped out, and then we're right back at that price point. So that's a really good way of understanding what you're seeing and not being biased about it, and understanding that these truly go two ways at these points. That's why they're inflection points. And it's legitimate to trade it either way. Depending on the overall conditions and depending on your size and tactics, you want to go for the shortest amount of time in the market. Remember, we're talking about scalping, and what are the best odds I can go in, grab money, and get out as fast as possible. That's what we're always trying to do. Okay, let's see. All right, we answered all those. Let's move on. So ranges. I want to go back to this piece here. Okay, so 3 criteria for each of these things. And again, these aren't like setups, but for example, for HMOMO, these are the things you want to be thinking about when you're seeing momentum. And for high volume reversals, those are the things you want to be thinking about. For ledge breaks, those are the things you want to be thinking about. So what do you want to be thinking about in ranges? Well, first of all, the first question you have to ask yourself is the market behaving in a manner where ranges even make any sense? And the simplest way to do that is the Wyckoffean kind of 1 minute view. And we have a really nice bounce off the low. And we've looked at this a number of times. What I do is I kind of zoom out. I go, okay, let's see 5 minutes. All right, this looks much more range oriented when I look at it in 5 minutes, because obviously it's it's less granular, right? And this is showing me some behavior that I'm very interested in, given the current conditions. And what is that behavior? And again, this could apply to gold or oil at this time of day too. I'm just using this as an example, but if somebody can remind me as soon as I'm done with this to show the same thing in oil and gold, I will, and I'll get to your question in just a minute, Alfredo. So what we're seeing is, the overnight, what is this is the regular trading session, initial balance high and low. And what I do, I just have it project past the close, right? So the close was here. This is regular trading hours right here, this box of activity. And then we went into the overnight, and the overnight's been in a pretty predictable range, hasn't it? There's not much going on and the boundaries are kind of loose, but this portion was a predictable range. And then we had a move up that got sold really aggressively. So there's the short, no question, that's a short. Now that ended. And what's going on here? Well, look at the spot it's happening at. We are, as I like to say, litigating, just kind of loosely the term for debating in court. We're arguing the case right now for the first hour high from yesterday. And that's why this is such an interesting range spot right now, because it's explored way above that and it's gone into it. And now it's holding this spot. And look at some of the things that have happened at that same spot, both on the downside and the upside. So can we conclude that this is a relevant spot? This isn't, yes. Okay, that's pretty clear. So given that, what kind of stuff can we do with the current range? Is there anything tradable? It's pushing the boundaries of the range on this little bounce off the low, which is often a really good setup, maybe to get short, given that we were going down, or just to see if it respects this range at all that it's formed. It's really small. It's only 3 points from bottom to top. And that's this behavior right in here that we're seeing. So could we play here? Maybe. This isn't a particularly great one. We're kind of drifting up. Remember, if LRCs are parallel like that in a slope, that's basically a weak trend. So, since we made the low, we've got a weak trend up. And so I'm not in a hurry to short it, but look at all the action right here. This spot has been in play for a while now. We chewed through some of the liquidity, but it sure looks like people are trading here. Oh, there's a quick burst down. Look at that. I like this spot short. I'm going to just take it. And again, sometimes you just have to make a decision. See if we can, I want to try to protect this. So let's see if I can get 3 or 4 ticks and get in between my entry. I'm short 44 and a quarter here. I don't want to lose money, but okay, let's see. Come on. This might be one to get a target. Let's just see if we can grab 8 ticks here, 7 ticks. Oh, we almost got it there. I had it and I just didn't move my mouse pad. This is why I like Jigsaw. I can just click on a price and fill. Watch this. I'll do that right now. Let's say I want to take 2 ticks. I just took 3 ticks, excuse me. So there's a 3 tick short with 100% odds of success because I'm in it for 3 seconds and it immediately was profitable. And I entered with a market order. I mean, I could have been more conservative there and entered, by putting up an ask, but I didn't. And that worked perfectly. Why? Well, the range is working. So, again, that was a 1 lot in the micros for demonstration purposes. But when you have that kind of behavior, you can do that with 5, 10 minis. Why is it working and why might you want to do that? Well, because it's predictable. What are the questions we want to answer as scalpers? Let's go back to the scalping is simple. Here we go. Okay, which direction are we going? Well, we were going up, and then we went into this massive ebb and flow that was a big battle. Okay, so with how much energy right fracking now? Well, we were going up a lot of energy, and then it became price discovery energy, which means unstable, and it's probably going to break one way or the other, maybe both. Okay, so that's how the energy is changing. So the current range nearby IPs, well, we were right at the top of the range when that happened. We were on an IP. So is it risky to be short? Maybe. Is it really obvious where I would be wrong being short there? Yeah. I mean, 2 ticks higher, I'm wrong. But I entered the trade and it immediately became profitable. Why? Because that was exactly the right spot to do that. So summing it up, that was a really good little inflection point. You could have traded it both long and short. I chose to trade it short. I'm a bit of a contrarian, and that's part of my nature. You guys all know that. But the beauty of those contrarian trades is they're just really precisely predictable. If you're wrong, you know it right away, and the trades work instantly. That trade, we were in that a total of 20 seconds, and with an MAE of 2. And, that's what I like to see. And I again, resulting is not what we're doing here. I'm not trying to show you how much money I made or how much money I can make. I'm trying to show you a technique that you can use to make money, and scaling it and executing it is up to you. But it's a very profitable technique because it's really consistently, it works really consistently. The only thing you can do wrong is have an opinion about which way we're going. Just let the market tell you. Like right now, we're about to go up, regardless of what I just said. But why? Because we're going up. It's that simple. Okay, so let's go back to ranges. Notice how this range is holding nicely. We traded the top of it, that pushed it down a little bit. Now we're trading off the bottom of it, and it's pushing up. So letting that range be dynamic like that, and just playing with it, whichever way it happens to be going, works well. All right, let's. I said I was going to. Cool, Brent. Thank you for letting me know that. I said I was going to show you some examples in oil and gold. I want to do that. Let me just really quickly answer a question here. Liquidity shown in the chart is total. Limit orders on both sides of the tape or tape. Okay, let me explain what you see on a liquidity heat map like this that you would have in Bookmap or this one in Jigsaw. What we're seeing is both historical and current liquidity. What Jigsaw does is the green and red bars on here is trades executing. So that's the actual trading. And we're seeing the delta of it as it's going by. And the flip chart is summarizing the order book as that's happening. And then this is the traded volume down here on both sides. So the liquidity that we're seeing, and just to exaggerate it, I'm going to make it like really black and white. The whiter it is means more liquidity. The darker it is means there's less people there. And what it's doing is it's showing in the past what that level was. Anything behind the current price is the past. And it's showing what was there then, and then right on the current price. So we're trading right here, right now. The liquidity is blinking because that's the real-time liquidity. As people are pulling and stacking, we're seeing it happen. You're not seeing it on my dome because this dome I've got it turned off, but we're getting it from my other account, which has full liquidity mapped. So, for example, this white up here is that 100 lot sitting right there, which is everybody at that price. It's not, we're not breaking it up by MBOs. I'm just getting the collective total. And for example, look down here in the 38, 37 range. There's a lot of people sitting down there. It adds up to a bunch of liquidity. So we'll probably trade down to that. And then when we do, let's see how it handles it. So does that answer your question, Alfredo? Give me a follow-up question if it doesn't. Look at that push down there. Meanwhile, let me put the other dome back up that I'm trading off of so that I don't make that mistake and trade the wrong account. Okay, so cool. All right, good. That answered your question. Thank you. All right, so let's go back to, I said I was going to show you some gold and oil examples. Let's do that. So, all right, here's oil right now. And I'm going to switch to the oil dome on the far right. Give me a second to do that. Okay, so there's the liquidity of oil. Notice how different it is. Is oil thinner? Quiz question. What do you guys think? There's like white, and look how far away it is, and look how separated the white is. This is classic example. Oil, it's an animal all by itself. So it trades much crazier, much thinner, and so what's the short term right now? Well, let's see. Oil has been exploring a lot today. Oil, because of the war, there's UB at the top. I think there's probably UB at the bottom too. There is. And it's a massive range. So, trading the range in oil under these conditions would be pretty silly because the range is all over the place. So this is a really good example of when you see something like that, you say, okay, the liquidity is not going to help me. The range is all over the map. So the only thing, and this is what I keep saying in oil trades, the only thing I'm really interested in doing in oil these days is if there's a really good momentum trade that's supported by some sort of structural event. Like if we were heading up to the UB or heading down to the UB or breaking 100 or whatever, I'd be all over oil. But under these conditions, it's fun to watch. But trading this, there's just better opportunities. I can go over in the indexes, and pick off $50 scalps all day. But trying to figure out what oil's going to do in the next few ticks, you just look at these runovers here. See these giant, massive moves, in 5 seconds. Oil likes to do that. Let's do real quickly here. I don't have a 5 second for oil. Let me get one up so I can show you what that looks like. It's pretty wild. So. Here we go. So this is the 15-second view of oil. And this is what I'm talking about. You can get these, like, look at this spot here. That looked like, it's coming up. It broke the ledge. And the reversal was just, from what, 99.19, that was right at 100. And then, in a heartbeat, it's at 98 and a half. A one lot, that's $1,500. So you really have to respect this. And it's fun to watch right now, but I would avoid trading it. It's just too crazy. That maybe the structural stuff, the pit open that JVC does, the 8 overnight one, maybe those are a little bit more predictable, but I have to conclude under these conditions that oil is fun to watch, but we're just better off playing in the indexes. And real quickly, I don't have a footprint set up for gold, but I can tell you from the one that's running on my other screen, which I will just drag over here. Gold right now is a very interesting momentum trade. This is its 3-minute view. Let's just blow that up. But again, gold has not held momentum. It's part of the war trade, and I'm just not interested in that. If I'm going to play gold, I'm going to do it with the ETFs, which I am doing right, by the way. When we traded down to 1900 and we broke it briefly into the 1800s, I got long the double gold ETF, and it's up nicely right now. But from the futures point of view, again, you can catch some of these pushes up, but they get sold fast and it's thin, and there's better conditions to trade gold and oil under than we have right now. As fun as the war volatility is making them look, I'm just finding that, from the preserve your capital and make money point of view, the indexes are smarter right now. Crazier than NQ? Yes, it can be, Elena. Particularly oil can be crazier than NQ because, and it's a really good question. If you think about it, NQ is crazy because it's thin, but it is trading as a derivative of the NASDAQ 100, right? So, if it's regular trading hours and you can see the NASDAQ, you have some way of gaming NQ, at least understanding, where ranges are or where, buyers are stepping up or sellers are stepping up. The problem with oil, particularly gold to a lesser extent, but the problem with oil with that same thing is the other time frame traders, the traders that are actually users of oil, airlines, shipping lines. When those guys enter the market, it's really disruptive because the market's thin and because they trade real big volume and they don't care about small price fluctuations. So, if we were scalping, getting a trade from, 99 in oil down to 98, that's $1,000. That's a winner of the year, for a one lot. That's a great trade. But the movement from 99 to 98 to the guy that's hedging American Airlines fuel bill for Christmas, he doesn't care. He just doesn't want to pay 120. So, he might push the price around between 99 and 95 as he's buying and selling, hedging his fuel costs. And we get chopped up and we're cannon fodder while that's happening. That type of thing wouldn't happen in the indexes because the indexes are a derivative of equities, and the equities are spread across more instruments, and there's an actual value there that will hold more over time than you see in something like oil, where people with very, very different objectives can be in the market at the same time and cause a lot of disruption. Does that make sense? Cool. All right, good. And by the way, that's what we're doing this morning. Thank you for asking the question, because the whole idea of this particular session, the midnight oil, and this midnight oil idea for trade, that's the whole idea here of what we're doing, is just understanding the particularities and the peculiarities of these instruments and what's different. Oil on a chart looks just like ES on a chart, but understanding what's going on under the covers can save you a lot of money and make you a lot of money. I mean, look at the CL liquidity. It's almost scary. Let me just emphasize it a little bit by making it really dark. Okay, so we're trading right now, and there's liquidity right underneath us at 98. So it's on both sides, but it's mostly under us. So we popped up a little bit. That was predictable. But where are the boundaries? Well, there aren't any. There's a couple of guys here, they come and go. There's a couple of guys here, they come and go. It's very, very quick. The market responds very quickly to changes in liquidity and changes in price. Again, because there are some very significant players that don't really care about short-term fluctuations. So it's a very interesting one to watch, but you only want to trade it when the conditions really justify it. And again, in my view, as a price action trader, I focus on oil when I have momentum. and I have structural stuff to lean on that supports the momentum trade idea that I have at the moment. Okay, let's see. I'm going to take a quick break here. We're right on an hour, and this is a good time to take a break. So let's take a break for a few minutes. We have a nice range building again. So I'm hoping we're going to be able to do some, if not in the minis, at least scale up some micro range trades and show some examples of how you can work the range as it works either end of it. But we're going to take a break first. So let me put up my little break until, what time is it? 3:08. Let's go till 3:15. Let's take a decent break. So, and I'll put my clock up so you can see what time it is. So we're going to take about a 7-minute break. And I just want to throw some things out. Let's see. We got all those questions. Okay, no, I think we're good. All right. So I will see you guys in a few minutes. If you have any questions or comments, stick them in the chat, and I'll get to them. Oh, cool. Look at this. We're breaking down again. Ooh, how fun. Let's get rid of that. Where's the ledge now? Quite a bit further down. Very interesting spot. This might be a decent spot to play short. This is getting aggressive, but I missed the trade happened while I was getting my coffee. So now let's see how it handles this spot. This is a really weak low right now. Liquidity is above it, and it barely got bought. So I'd be really curious to see what the 30-minute looks like on that. Yeah, there's a couple of zero prints on the way down though, but now we're on the right side of the max min. Yeah, okay, we're going to talk more about this in just a minute, but we are getting closer to the pre-open now, so conditions are going to start changing. And so there's going to be a little bit more energy. You'll see the energy is going to start picking up now as people in Chicago and New York start to come online here. So this is some decent energy to the downside. Again, the key point is, if you're going to be short, you got to be short from a good spot. This is not a good spot, but the action is starting to look like the bid that was under the market might be disappearing, because I'm not seeing a lot of aggression underneath this at all, and I'm seeing a lot of people stacking up on the ask. So let's watch that a bit. And nothing came out on news that should affect. I'm just looking at some of the international news events. The most recent thing we had was France. New car registrations are down in France. Okay. Okay. What's that?
Do the French drive cars?
Yeah, I thought didn't they ban cars in Paris?
I would have thought so by now.
Yeah. Let's see. Is there cleaner momentum in CL? No, Jan, there isn't. The bigger players, it's not they don't care about a few dollars, is that there's two different, in all markets, there's different time frame players. But if you think about equities, the different time frame players in equities, what they're doing, if I'm a big hedger in equities, what does that mean? That means I own a bunch of stocks and I have a portfolio of equities and I'm using futures to hedge them. That's an example of a very, very large futures trader who's very passive. They would be looking at massive price levels, gross price levels based on lots and lots of contracts, not as inflection points, but just as VWAP. They're VWAP oriented. That's the one place where VWAP is useful. And so there's a lot of in order for price to move in derivatives, when the derivative of an equities index, in other words, all the indexes we're watching now, ES, NQ, these are all derivatives of US equities. US equities aren't trading. So everything that's happening right now is just purely speculation about what will happen in equities when they trade. Conversely, in oil is trading, and oil's oil. There's no other thing. It's not a derivative of anything. Derivative of oil is oil. And so it's a pure action because it doesn't have to rely on being derived. But there are also players that have totally different objectives, as I explained, like airlines versus speculators. And so that makes it tricky to trade unless you really understand its dynamics, which are, momentum can be wicked. It can move 10, 13, 15% in a day. And it does a lot, At the same time, structural levels like a ledge break. Oh, there's a really good example. Ledge break in CL, if I'm scalping ledge breaks in the indexes like ES, I'm looking for a couple ticks. I want to see it break and then I want to see it hold and I'll grab it. In oil, I've seen ledge breaks go for 100 points. I mean, they are so much more energetic, and predicting where to play and how to play can be very, very tricky. So I would argue that it's actually the opposite. I think it's less clean momentum because it can be so sudden. If we're at 99 and, that American Airlines guy decides, all right, that's a really good spot to hedge. I'm going to sell, 100,000 barrels and boom, that's like a day's worth of trading in one event. And that happens a lot. So we see that in gold also, but in gold, it's usually the other way around. When people are selling big chunks of gold, we see a big sell-off because sovereign wealth funds periodically do that. They'll liquidate big chunks of gold. And we saw that last year a lot. The market, dropped 80, 100 points on one big liquidation. And that was, surprise, surprise, that was a great opportunity to buy because that guy had to do that. And it just created an opportunity for us short-term speculators. So that's the way you have to think about oil as well. You have to let it be extreme and use the extremes to your advantage. And that's a very, very different thing than I just said about indexes, where we want to use the predictability to our advantage, like the fact that it tends to range when it's not in high momentum. And so this is a really important point, but it's subtle. So I hope you're all getting it. That was a good question. So follow-up question. Some U.S. equities are trading on other exchanges. Okay, here we go, Jan. This is a perfect example of me to be a good tough love mentor for you. Bull fucking shit. Yes, they're trading, but it's a fraction of a fraction of a fraction percentage. So what you're doing, Jan, is you're being way over analytical again. It doesn't matter. Yeah, there's tiny little pieces, but they're irrelevant in terms of the trillions of dollars that are in play when we're in regular trading hours. This is one of those things where, trying to argue every point will just get you confused. Think big picture. I hope that makes sense. Okay. Good question. Let's see. Maybe this question is too much basic and maybe not today's topic, but I want to know how one should approach when starting to learn reading the tape. That's actually a great question. That's why we're here. So excellent question. And let me answer it. The best way, in my opinion, to start learning this stuff is just to watch. And I would make it really simple. I mean, I learned the following way. Let me show you the way that for me is the most visual. And it may or may not work for you, but this is what I would suggest. I would get rid of anything like a footprint to start with. And I would get rid of anything like liquidity. And I would just watch that. I would watch a 15-second chart with bar by bar delta and the wave volume on it. If you want to learn price action, this is where price action happens. And you'll get really good at forget everything else. Forget the market profile, forget the volume profile, forget everything else, and just focus on what's happening in the very short term. And so, for example, if you're trying to learn price action, if we have this kind of trend down, clearly a short trade if you got a good entry, and then we got down here and we've got all this delta that's way bigger than it had been. So, massive selling and price is not going down much anymore. What does that tell you? Could that potentially be absorption down there? Yes, it could. So what would likely happen next if that's what's going on? Well, it would probably bounce. Let's see what happens. It goes into ebb and flow, and that aggression goes away. Okay, so if it's going to bounce, it's going to do it right here, or we might see the aggression reassert itself. So at the moment, this spot right here would not be a good spot to be short. Very dangerous spot to be short. Great spot potentially be long. If it pushes up and kind of stalls right around here, great spot to be short, particularly if you see the delta reassert itself. So let's go a couple more bars. Okay, look what's happening. Not only did that selling dry up, but price held against all that selling. That's called absorption. That means we're real likely to at least have an attempt to go the other way in the short term. And then look what happened. We did go the other way. We got right up to the previous peak. Remember I said, if you're going to short into these, you got to get the right entries. You got to be shorting on the top of the range, not on the bottom of it. If you're the guy selling the bottom, you're the guy that's getting stopped out. So you want to be on the other edges of the range. You want to be selling extremes, and you want to let ledges break and then come in. And look what happened here. We had a couple little attempts at ebb and flow. We broke down off of them, but look at the difference in the aggression, Elena. This was really aggressive. It's not, and price isn't really changing. So this is what it looks like when selling is kind of waning. It's drying up. And that doesn't mean you naturally get long, but it means that your asymmetry on the long side is better than it is on the short side. Again, your information risk is high. We don't know what's going to happen next. But if I'm long here and I'm wrong, it costs me 2 ticks when the potential is enormous. If I'm short and I'm wrong, where am I wrong? You know, the place to be short is here. So if I'm short here, I don't even start thinking about I'm wrong till here, and I'm going to get stopped out up here. So that's exactly why that happens, and you want to play these the other way. And look what happened. You know, it ebbed and flowed down there for quite a while. It went down again, but there's no aggression. And that's the way of telling you that the market's kind of done doing that for a while. And then when the aggression reasserts itself, you know, then we start changing price again. So, you know, this kind of bottoming that it put in started here, and it stopped having as much aggression. See all these big lower lows? You know, we made one, but then, you know, we made a higher high. And so there's another lower low. It kind of stopped going down as aggressively as the delta waned away. And now we're still trying to hold that area, but look how much more of it is on the buy side. And they are managing to lift the ask on that. So the potential for shorts to get trapped here is significant, and it's a decent spot to play long. Now, that's kind of how I start learning it. Then the next step is, okay, now we want to really dig in. So let's get, hang on, I'm trying to get my footprints back up. I need, that one, and that one. Okay, so once we understand that, and just we're dialed into the price action, which right now is kind of drifting up with a baby bid under it, then qualifying the edges gets really useful. Now that we know what we're doing with terms of price action, we can understand how the price action interacts with the range. And that's why I like to do this. And at this stage, I wouldn't look too much at the supply and demand. Again, I would look at just how is price interacting with the range. And that's kind of step 2. And this is a really good question. This is exactly what I wanted to talk about today. And once you kind of understand, okay, number one, what's price action all by itself with just, you know, if I just watch it going back and forth and get a sense of the delta and the movement. That's number one. Number 2, can we qualify that movement against the range by looking, you know, when we're at the extreme of the range, what's going on in the deltas? Yes, we can do that. It's happening right now. We can see there's a little bit of buying right here, but the sellers are still in control. So, you know, we could go down before we go up, but the interesting spot to play long back into the range. It's probably going to go back into the range. The aggression here is pretty weak, and we're right on the edge. You know, you can see that there too. So that's kind of phase 2. And then the holy grail, you know, the golden goose is phase 3, where you are level 3, you know, step 3. And hang on, where the heck did that go? Oh, I have it minimized. That's why it's not there. Okay, so put that back and hang on a second. Reorient myself. I want that one. Okay, so the next level is, all right, let's look at the liquidity. And that tells us even more. So we understand where we are in the price action. What's the price action? And then we look at, okay, how's the price action interacting with the short-term range? That's giving us, you know, kind of the very short-term boundaries of where we want to play with respect to price action. Then we add a layer of, okay, let's qualify that, and let's see, as it's at the edge, you know, is it trading on the buy side or the sell side, and how aggressively? And the emoji tool is a really useful visualization for that, which is why I like it. It sums up the supply and demand for me, so I don't have to do it. That's all. But, you know, you don't need to buy an emoji tool to do it. And if you know, spend the $50 or whatever, it's useful. So that's what we get out of that. And then the liquidity adds the last piece of the picture. So once we understand the price action, which is the ebb and flow, momentum, high volume reversal, lack of momentum, then we understand in what range. And then the next question is, okay, where is liquidity playing with respect to the range and the price action? And right now, the only significant liquidity is somebody's got an offer right above us. And that's probably a magnet. We'll probably trade back up to that. He's probably trying to make it seem like there's resistance. And sure enough, we traded right back to it. Look at that. You see, after a while, you can literally just say what's going to happen right before it happens. That's the beauty of trading price action. You're trading on overwhelmingly likely odds. And the reason I said that is because it's overwhelmingly likely when we have a push down and there's liquidity above us that's really a magnet, and vice versa when the liquidity is below us. Nobody advertises a lot of liquidity when they really want to sell there. They would just sell there. Why would they advertise that? So, just think about it. It's not spoofing, but it's kind of like that. Think of liquidity as a magnet unless we're really going the other way hard, like we're starting to now. And now he's managed to convince everybody that he's resistance, and so we're going down. But it's a false model. That's not resistance. That's somebody just putting the stake up there. He really probably doesn't want to sell there. He may want to buy there. Who knows? Okay, let's see.
Something.
What's that?
Right, you mind if I add something for Elena?
Oh, absolutely. You can add any time. I would love for you to contribute. I get tired of talking.
Let me start with a question for you, Elena. By any chance, do you play a musical instrument? You do? Okay, fantastic. So, okay, perfect. Then let me put this in musical terms, because I'm a musician as well. And so this always has made sense to me, is provided, and assuming that you have found yourself a good teacher, and now you want to get really good at guitar. How do you do that? This is a real question. How do you get good at guitar? Exactly. You practice a lot. Ultimately, that's what is going to burn this stuff into your brain. And it's not, what Jeff has got up right now. I love that diagram, that flow chart. It's not going to happen from a week-long course. It's not going to happen from a few months. It might, I would even say assuming you do good practice and you practice diligently and you're not just screwing around, I do believe it can start to happen within a year. You will see if you apply yourself and practice for a year, by the end of a year, you absolutely should be seeing measurable, objective, quantifiable progress. You will see, fewer losses or smaller losses or beginning to have gains or just understanding what you're reading, a lot like learning music. The first time you look at a sheet of music, or tablature in the case of guitar, it means nothing. It's a bunch of dots and lines and squiggles and what is this? I don't know. But you do it long enough, you stare at it long enough, you practice it long enough, and you start to be able to look at it and say, oh, I know what that is. That means this string, and I understand that inflection and how to play that note and all of the things involved. So beyond everything else, give yourself the time you're going to require to practice and practice and practice, and then go practice some more.
Good advice. That's absolutely correct. Excuse me. Okay. Let's see. Where are we? 3:30. So we've been at this an hour and a half, and we have. Hang on. I just want to. The other session is scheduled for 6. Is that right? Let me just check that. I think it's.
You're talking about your session, Scalpathon?
6:15. Okay. So I'm just trying to think when we're going to get the best information and what we should be doing with the rest of this session versus that one. Okay, so don't forget, guys, there's another session this morning. And what we're going to do, that one starts at 6:15 my time. And that's 15 minutes before the open. So we're going to talk about the pre-open, and then we're actually going to trade the open 5. So this is going to be one of the sessions where you really want to be there and just watch and listen, and it's going to just be stream of consciousness. So I want to make sure, excuse me, I'm burping. I want to make sure that we've gotten everything we need to do done before then. in what is about another hour and a half. I don't want to drag this out long if we're not doing something productive. So I'm thinking maybe we'll wrap this one up a little early in about 45 minutes. And let's stay on the stuff that we're doing with respect to ranges and this conversation about what to learn and whatnot. I think it's really valuable. And I think I might be at a spot where we're going to get a couple of decent trade setups. This looks like it might be a long. Oh, I love when I do that. This looks like it might be a long. I'm saying this at 42 and a quarter as it goes to 45. I was about to just buy that on the market, but I wanted to explain it to you guys before I took the trade. And that's one of those cases, JVC, where I should just take it and then explain it, because that would have been a nice 4-pointer right there. And that's the kind of trade you're looking for to grab big points out of. Waleed and others, that was a real high odds trade that just instantly became a real big winner. And that's the kind of setups you're looking for. Notice how there's no trend there. It's range bound, and all that was look at the center footprint. It was just aggression at the bottom of the range. And the reason I said what I said is looks like there's a long here, is I saw that happening in the ebb and flow, and I saw the liquidity starting to build. And the last thing, I haven't talked about this much, the LTQ went up, the last traded quantity. That is the number I have in the middle of my bid ask here. So it's summing up what's trading at a price. And so what are the quantities trading at that price until we go to another price? And it's a way of measuring aggression. And when we were down here, those numbers lit up. That's what caught my attention. I was watching this ebb and flow, and the LTQ started to get really big. And I saw the flip chart stacking on the buy side really heavily. So that was just a really clear spot to be long. I wanted you to understand all the pieces of it, and that's why I didn't just jump on it. But that's probably the best long signal we've seen since this Scalpathon started right there. So go back and watch the replay of that spot. And JVC, if you would make a mental note to timestamp that, as I was saying it, just, again, I want to make this point over and over again. We're not here to watch how much money Jeff can make. Otherwise, I would have just taken the trade and not explained it. I'm trying to teach you guys. That was probably the best trade since we started the Scalpathon right there. It would have had an MAE of 0, and it worked instantly. As I was describing it, it took a second to work. That's what you're looking for. And what you want to do is you want to develop your instincts to, when you start seeing that, you just go over and you hit the market. And that's what I do when I'm not teaching. And I have to train myself to do it when I'm teaching, and then explain after why I did it, so that you guys can actually see it play out. But again, don't worry about how much money I'm making or not making. I'm erring on the side of teaching instead of doing trades, which will impact our P&L a little bit here. That would have been a real nice winner, but I think that's a legitimate trade-off, and it's the right trade-off. So. Okay, let's see. My problem with ranges is the edges are very unclean. Okay, Jan, I love you. My problem with you on everything is that you want things to be clean that aren't clean. The world is sloppy. It's messy. Chaos theory. You're a mathematician. You understand chaos theory. And you have to, what's that?
Trading is dirty.
Yeah, you have to accept that there's chaos and that it's never going to be clean. You can't get predictability. So and for you to scale in now, you're too new to be a scaling type. What you should be doing is practicing just getting one good entry and exit. Scaling is a whole different skill set. That, if you want to understand scaling, shoot a private message to Amy, because I've talked about this in context with her a bunch of times, and she'll be the first person to tell you how important the next statement I'm about to make is. Learning to scale is a whole additional skill after, emphasis intentional, after you learn the skill itself. Scaling is an additional skill on top of that. I just spilled coffee on my rug here, so give me a second. Being emphatic there, I need to clean up the coffee. So do you get that? It's a whole nother skill, and they're different. They're two different skills. So number one, you got to practice understanding the range, and then scaling into the range is like an advanced skill. It's like for experts in the range, you can use the the uncleanness, as you put it, to your advantage, to allow you to use the uncleanness to scale into a better entry of the same idea. And I think I almost have my coffee out of the rug here. So I apologize. That was unintentional. You have to wing it when you're teaching. It's easier to do this part of winging it when you're not teaching live. I've had some crazy live training experiences I had to just roll with. Someday I'll tell you guys those stories. When I was training for Microsoft, I used to do these large events in movie theaters, and we'd have 1,500, 2,000 people for a big, Windows 7 release or whatever. And one time I did something like this in front of 10,000 people. And fortunately, I've been a trainer long enough that I know when something like that happens, you just got to have fun with it and go with it. I basically dumped an entire. We were teaching in a theater. I was doing a presentation in a theater that serves food. They have there's a lot of those now, and basically in giving somebody a prize, 2 slices of pizza flipped off of a plate and landed on my white Microsoft shirt. So I had to just roll with it. And we were videotaping, and the corporate executives were watching, and it was pretty funny. So anyway, all right. That was a great question. Those last 2 questions were among the best questions we've had. So good stuff. Let me get the right dome back up, and let's do a little trading. You know what? Let's for the remainder of this session. Whoops, that's not what I want. For the remainder of this session, and I also just want to preface the next session this morning, the Open 5-1. I plan to trade pretty aggressively, even though the Open 5 can be pretty hard to trade. I want you to see how somebody that knows how to trade it attacks it. And I may lose a lot of money. I may make money. I may just get chopped up. Who knows? But I am going to do that. So I'm not pushing to trade too much now, but this is an interesting setup. So when I see conditions like this, I'll literally give you a stream of consciousness. We're heading down. The momentum is down. This is a trade I would want to be short, but I'm not short. So is there a place I can get short? Yeah, maybe on the liquidity up here, but is this likely to continue? That's the momentum question. And the answer is no, we're kind of in a range. So I immediately discounted that down momentum into, yeah, it's there and it might be a short, but the risk reward profile just isn't very good here. And I'm not using any R to R. I'm just saying, okay, if I were short, how much distance do I have? Yeah, there's some potential there. And the flip chart showing the book is thinning out on the buy side. We're heading down. But, we just bounced off an area that's only a couple ticks below, and we did it really aggressively. So, again, the net is we're heading down to the edge of the range, and I probably don't want to do anything here. Short or long is probably not good. It's too unclear. And so that should always be your first conclusion when you're looking for trades. Is it clear enough to take one? The answer is no, not right now. What spots do I like? 50 is interesting again. Anywhere around there, it's traded aggressively. There might be a long or a short. Do I like this low down here in the 40s? It got bought real aggressively, which could be deceiving. I wouldn't necessarily just buy that if we got down there again, but I'd be very interested in seeing if that started to happen again, which would indicate there's somebody really motivated to buy down there or some group of people, and that might be an interesting trade to join. So that's kind of what we're seeing here right now. Let's see. Do we have in mind the overnight range before the market opens? No. Great question, though. In the overnight, this is so important. The overnight is an animal all by itself. You have to just think of it. And again, Elena, this is what you should do. Put up that view, 15 seconds. And what's happening right now, we're in ebb and flow in a tight little tradable range. And it's sort of near the lows of the session, but it's not close enough to play that. That's what's going on. You don't need to know anything else right now to trade on the overnight. Now, when we start getting closer to the opening of regular trading hours, that point, understanding the kind of structural position and what happened in the, where the overnight highs were and was there UB at them and what was yesterday like, those things start to become more important. But I can't emphasize strongly enough that most of what goes on in this time of the night is price action. And it's reasonably technical too, as in technical analysis. I mean, moving averages work okay and stuff like that at night. I wouldn't use it as a trading system, but it will give you a decent idea what's going on. For example, when we first started the session, we had a real, trending move down that was really clear. It was a little sloppy, but it was a short. And then we've been in this ebb and flow at the lows ever since. And so again, it's fairly clear what's happening. And adding any other pieces like, where's the overnight low, where's the overnight high, where's the min max, isn't going to give us any better information. We see everything we need to trade this. And that's my point. And it's an important point. Ooh, we're coming down again. We're back at that 40. See that? So that 40 that got bought so aggressively got sold through, but now there's liquidity down here just past it. Is this a spot we could play long? Absolutely. Are we necessarily going to make money? Maybe not, maybe, but the odds are good and it's predictable. If we're wrong, it's obvious. So, don't always buy those. That's not what you should do, but is this a reasonable place to play? Yeah, it is, and this trade's already 3 ticks in profit. Boom. Okay. I can do that all day. I don't have to do it with a 1 micro. I could do it with 3, 4, 5 minis. That's my point. That trade was wickedly good odds in my favor. If I was wrong, I would have known it immediately. I could get ticks. I could be in the market for a grand total of 9 seconds. Remember, scalper. You're here to learn scalping. Scalping is not predicting price levels. It's not trying to get 5-point winners. It's trying to get trades where you're overwhelmingly likely to be right. That's what this is about. And when you get good at that, then you can go to phase 2, what JVC was talking about with the practice and our point that learning to scale that is a whole nother skill. The first skill is understanding that there was a good long opportunity right there. And by the way, that long opportunity is no longer. Now it looks like a short. And because the price action's flipped over. We did the reaction already. Now it's starting to get aggressive down again. So that's the first question. You have to just first understand how to read it. Then when you do understand how to read it, then you have to understand, okay, were I to scale this, how would I want to do that? And in this case, this trade I would not scale. Really good example. Why? If I was nibbling long here, I would not scale. Why? Because the potential for it to run me over, there's no clear boundary. The low is 28. So if I'm trying to nibble long here for a scalp, scaling into it is the stupidest thing on the planet that I could do because I'd be scaling into it, running me over. Whereas if I was trying to buy, let's say we ledge break 28 here and I'm scaling into the ledge break, I'm buying 25 and 26, and then we go up to 29, I add another one, and then we go to 30. That's where you scale because it's improving my position. If I was scaling here, I would just be adding to a loser. And it might look like the same thing under different conditions, but it's very different. One is improving a good position with a better entry, and the other is trying to make a bad entry work. And they are completely different, but they look the same when you're doing them. And so it's important to understand, never, ever, ever add to a scalping trade unless you were going into it with the idea that where you're buying is not the good entry. The good entry is further away. And if you can scale into it, you'll get a better entry. But you never go in and say, okay, I'm going to nibble here. And if it goes against me, I'll add another one and that'll lower my average. Don't ever do that because you'll lower your average right to 0 and you'll get crushed. And that is why those of you, and a number of you have asked me about this, you have trouble. I know Brent mentioned it. Jan, you've mentioned it. A bunch of you, qualifying the ledge. And it's easy to get run over by scaling in because you're scaling in at the wrong spot because you don't understand scaling. Scaling is about better entries of the same idea. And until you're good at understanding where the good entry is, trying to learn how to scale it makes no sense because you don't know what good means. So scaling good isn't possible. Does that make sense? That's a really important point. Let's see, let me read some of the, sorry, what was there at the low that you saw to take the trade? Everything that's always there, nothing different. It was all the same stuff I'm always looking for. What's the current energy of the move? How is it changing? How you knew it was close to 40. Because it was trading at 40. That's where we are right here. I'm not sure I understand the question. See if you could clarify the question. Let's see. I caught the exact same trade. Cool, JVC.
Yeah, it was really funny. I entered it like 2 seconds before you said, "Ooh, I think there's a long here," and I was like, "Wow, okay, I guess I'm starting to actually like see this stuff." Like, because I'm
blinking.
Not everybody probably knows this, but my personality and style is much more in tune with Lee's approach to trading. But I really want to be able to do this. I want to be able to just anytime look over, and go, "Hey, look, money," and go grab it. So I'm working on it just like the rest of you.
Yeah, it takes lots of practice, and that's the reason a lot of times I use micros, even if I'm trading by myself and I'm not trying to teach. It's just because I'd rather go into the market and grab, $5, $10, $20 at a time than go into the market and try to grab 50 or 100 or 200 at a time and risk 500. That just doesn't make sense, because I can, grab these $20 bills over and over and over and over. And I posted my P&L yesterday. Again, don't result me. I'm not posting to show you how much money Jeff made yesterday. I'm posting this to show you this technique works, and it keeps you from making mistakes. I had one loser. It was 20 ticks of MAE, which is too much, but I shut it down. And the rest of the time, I just picked up $20 bills, $5 bills, and I walked away with $150. I pulled the commissions out, $135. And, there was virtually no risk in there. Most of those trades I was in for, look at the time, 5 seconds, 6 seconds. This one was a minute. That was a long one, 41 seconds. My biggest winner, I was in for 5 seconds with a one lot. Do you get it? Scalping is a game of not taking risk, of getting in, grabbing money, getting out with your money before something else happens. And it's not overthinking it. You have to learn to see the patterns. And what JVC is saying is really important for those of you that are new. The more you watch it, the more you'll start to see it, as long as you're looking for the right stuff and you're not thinking in terms of the price level. Notice how when I'm doing this, I'm really not caring what price it's at. I'm looking at the action, and then once I see the action, I'm saying, okay, how far could I get that? Like if I was thinking short here or long here, 30 is a decent target. And here it comes. And so that's how you have to think. But I'm not looking at it and saying, well, I wonder if 30 will hold. I'm just saying, no, we're going that way and there's liquidity there. So, that's a decent magnet. And would I wait for 30? No, I would have taken the 4 ticks I got on the way to 30. That's what matters. And so that's a good example. And right now we have a great little setup because there's liquidity above us. And he's probably looking for it to trade up there. So, at some point, this is probably going to be a decent long, but at the moment, it's still getting sold. So let's just watch it. Where is it in the range? It's in the middle. There's no demand or supply nearby. So it's a tricky spot. It's not on a quarter, which is the other problem. That's why it's kind of acting well. This liquidity is up on the 35 quarter or just below it. And then there's some more liquidity down here on the 30 quarter. 32 doesn't have anybody, but it was in play. We hit it and we popped up a little bit. And that always happens in ES. Just think in quarters. It's useful. It will give you just it's like a grid, just like it's like the grid on Excel. You can just kind of put things into boxes. So, 30, 32.5, 35, 37.5, 40. Those are the quarters. When you're scalping the quarters, oh, look at the liquidity stacking above us now, right on the quarters. Oh, that's hysterical. What they're doing is they're trying to demonstrate resistance, and that probably means we're going to trade up there. But if people stack into them, then they could all suddenly sell, and we could push down real hard. So this is an inflection point forming, and it hasn't inflected yet or fully formed, but it looks like it's going to be a long to me, which I know you guys think counterintuitive, but the stacking up I think is a ruse. But let's see what happens here. You want to look for absorption. You want to see the sell side trading and price not going down. And that's what's happening. If they can lift the ask here, boom, there's your puke. Hello. So again, you could just trade that 4 ticks, a couple of ES, and there was no risk. And the MAE would have been 0 on that trade. Does everybody see that? That was a perfect example. And it unfolded right in front of us. And we traded right up to that liquidity. He is a magnet. He wants to trade up there. And, you have to learn to think that way. It seems backwards, but it isn't. It's correct. Let's see. Okay, I don't see any other comments. That was a really good example. And now we're continuing down. That's why you have to let the market give you your opinion. I saw that as a really great long, but just for ticks. I'm not going to sit in that and say, oh, I'm going to target 50. We're going down. The direction is down. So if you're scalping long, you're taking advantage of these little sudden pukes. That's all you're doing. And you have to be really nimble to do that. But the beauty of them is they're so predictable. They happen over and over and over. And you just have to get in sync with them. Okay, we are almost at the next half hour. So this was a couple of people mentioned this. And this is where, again, this time of the morning, we are starting to get, some economic numbers are coming soon, and we're getting into the pre-open. The volume is picking up. And so this is a good time to start looking at a little bit zoom out. So, now as we're going into the pre-open, the first thing that I start to think about, so 4 o'clock is the next hour or half hour boundary. And one of the things, again, I'm watching on my other monitor, and I'll bring it up now and then just to show you what I'm watching. So we still have this price rejector at the top, and we have a fairly big negative delta above it. So it's fairly easy to argue that the shorts are in control here. Sellers are in control. You should all understand all this from your TM stuff, but here's min delta. We're below it. We've got, good aggression. Look at the deltas on the way down. They're all on the sell side. And now we're going down. We're going down with them on the sell side. So this ledge is going to go, Jan. 99% chance we will break that ledge. Actually, we just broke it before I said that. So this one went. And this is interesting too. Look at the difference between the micros and the minis right now, 0.75 of a point. That's just arbitrage. So, we're about to see another ledge break here, and there it goes. So there's 3 more ticks of the ledge. Yeah, this ledge is just breaking in a couple of ticks at a time. And notice how there's some liquidity under it, but it is breaking. 99%. I'm not kidding. The price rejector is a good thing. And then look at where the min delta is. It's coming down with us. Sellers are in control. When we get above that, what will that mean? That means we're back in the range. As long as that's above us, sellers are in control. But if we're between the min delta and the max delta, that's what a range looks like. And this is about to become a really big range just on this one rotation. So this is a good time of the morning, like I said, to start looking at the structure and look for stuff like that, because as we get closer to regular trading hours, that gets more important. People start paying more attention to it. And so look at the min delta here. It's holding right here. So are we seeing absorption? Look at all that selling. And where's price going? It's not going anywhere. We're seeing absorption at the lows. Could we pop back up into here? Absolutely. Is it likely? Yeah, it is. But this is pretty good down energy still. So I don't think we're done going down. And there we go. Now we've got UB at the low. So we're still going to go down. And again, the momentum is always the first thing you look at. And this momentum is really strong down. So, you don't want to buy this yet. You could be shorting these ledge breaks. Absolutely. They're pretty good. And now we're at a quarter. We just traded 25. We had some liquidity get absorbed there. There's our pop up. And so again, you could lean on this if you're short, but if we get on the other side of that, it's probably, your short's probably over, at least for the short term. No pun intended. And I always like to look at the volume on the pullback too. And if this is all coming by on the buy side and we're lifting the ask, then we're definitely going to pop. We're going to get a puke here. So let's watch that. So this is step 2 of the process, learning to interpret the structure around the price action. And in order to be able to do this, think about what I just said. You have to A, understand price action, B, understand structure, and then C, understand how to put it together, which is what I'm explaining right now. Like I was asked earlier, could I lean on the negative or positive delta? I wouldn't do that at 2 a.m, but I'd definitely be doing it under this condition where I have a price rejector, I'm below it, and we're pushing down, and we're making UB as we're pushing down, although the last one we didn't. So that's a perfect place to be short, but just understand, we could be back up here in a heartbeat. There's your price rejector on the pullback, possible long now. See if this low holds. And what it means, a low holding, is you will see a lot of volume and price not continuing to go down. And that's not what we're seeing, but we are starting to see some stops here. We just saw some zero prints. So there's the bottom of that run right there. Now we probably are going to see it consolidate.
I caught 4 ticks right on that bottom.
Perfect. Yeah.
So clear. I was shocked at how clear it was. It's just like, this can't be that.
Yep.
It can't be what I'm seeing, but I got to take it.
Yep. It was that clear. I mean, that's why I'm really trying to focus on explaining it instead of trading, because I really wanted you to dial in on what I'm seeing. And look at the lift here. See, we lifted off the low and we're coming back to attack the negative delta. And if that holds, that's your short entry if you're thinking short with the price rejector. But if it doesn't hold, look out. We're going to pop up. We've got a lot of thin spots here to go through. There was 0 prints and we filled them barely. So, this is a great spot where shorts could get trapped. It's a setup to trap the shorts who are aggressively, selling every bounce. And that's why, trying to trade this as a trend is a total mistake. You have to be dialed in on what's happening with the action right now. And here's our long. Look at that. It's right on there right now. So yeah, we probably will get a spring here. Let's look at we'll probably get a spring if we clear this spot right there. So let's say, let's call that 29. If we clear 29, we'll get a spring probably back into the 30s. We already have a bit of a spring here, but there it goes. Hello. Oh, I love this. And there it is. And you could just see them. The shorts are just like, oh my God, I'm short. I got to get out of the way. Oh, quick, buy. And the guys who are selling are just like, cool, I'll lift the ass. Cool, I'll lift the ass. Cool. This is a perfect example. And yes, that's a high volume reversal. And that's what they look like. Let's review. What are the criteria for high volume reversals, folks? Real simple. First, we need HMOMO because we need high volume to reverse from, right? So HV reversal, high Momo. Did we have high Momo? We sure did. Really aggressive. Then what? Continuing or likely to. It held a low. There was liquidity there, and it looked like, no, it's not going to continue. It looks like it's getting bought. There was a lot of volume, and price stopped going down. That was your clue. If you were watching that on bar by bar delta, what happened? Bar by bar delta goes from being overwhelmingly negative to being positive in one bar. That's the high volume reversal starting. If it turns out it's not one, you're wrong by a tick or two. But overwhelmingly, you'll get at least to the middle of the range like this one did. And so that's a nice little trade, 23 to 29. I mean, and it's perfectly telegraphed, even if you chased it. Let's say you got filled at 25. You still got almost 4 points out of this thing. So perfect example. So what you're looking for is you're looking for HMOMO that just suddenly stops. It does it on a change in delta, and that is your sweet spot right there. And so again, Momo, stop suddenly, clear spot where you're wrong if it does continue, but if it doesn't continue, the reversal of energy, and boom, you catch your ticks and you get right back out. Low risk, low time in the market. You can trade these with size again, because if you're wrong, it's obvious. So size is justified, particularly under these conditions where the ranges are relatively small. We're not in this giant 40-point range like we were yesterday. We're trading a nice little predictable range, 6-8 points. That's perfect. And so you want to just take those. Forget everything else. Just take the trades. They will work. If they don't, you'll get out with a small loss. And you do those over time. They work more than they don't, overwhelmingly. So good example. Okay. Let's see. Cool. All right. Good explanation in there. Thank you, JVC. All right. So here's 4 o'clock. Coming right now, my time. So, we probably will see a bit of a rotation as we go into the next period. And so let's watch the structure here. That was a pretty good pullback, off that low. And that low was real clean, 4 by 0. So let's see. So now that, all right, there it is. There's the next bar. So if we're going to continue short, we would expect to take out that min delta there. And it's looking like it might test that. Let's see. So, if that goes and it goes aggressively, that's a decent short back to the bottom. But for the moment, the only way to interpret this is that here's the max delta, here's the min delta. We're right in the middle of the range, and on the pullback, we're right in the middle of the range even. Look at that, There's a little price rejector. So it's in price discovery in this tight little spot. It's trying to determine if this should hold, and people are throwing their orders up, and the market's getting a lift. So it continues to be a decent long, and the shorts continue to be caught off sides, which was pretty easy to see that one coming. Go back and watch the playback of that. All the pieces we were looking for were there on that one. Okay. Absolutely, Elena. One trade a day of that with size, and you've made your salary. And another way to look at that is, instead of using size, you just pick off a few of those a day without size, and it's still a couple $100, and that's fine. Again, don't try to think in terms of, number one, your results. Don't look at your profits to determine how well your trading system and your process works, because there's variables in the profits that don't have anything to do with the system you're using. So always look at, am I seeing the action, and the things that I'm expecting to happen based on what I think I'm seeing, are they happening? Like, did that low get bought? It sure did. So it's that, if you can keep it that simple, it takes so much work out of the equation. And scalping is really simple. It's one of the things I like about it. It's one of the reasons this appeals to me so much is, I can leave my computer on, like I say, and walk by and say, oh, wow, there's a long, boom, take it, make $100, make $500, whatever, make $50, make $20, and go back to whatever I was doing. I don't need to really pay a lot of attention. The setups occur very visually once you get used to them. And at the same time, sometimes a good scalp entry can be the beginning of a wicked good structural or swing trade. Like right here, if you got long and you left it on, you have 12 points so far, and it looks like it might have some more traction. This is a decent move up. Liquidity has formed underneath it a couple of times. We're trading into some liquidity here that we sold off of at 35. So that might slow us down or stop us, but that's a hell of a good move. Yes, exactly. If you can focus on the risk, because that's the only thing you can control is the risk, right? That's exactly right, JVC. And the profits take care of themselves. And, I used to pat myself on the back when I'd have a big winner. I used to say, cool, we just had a big, that was a 10-point winner on a 5 lot. I never do that anymore. I don't even look at that. I don't even look at my results when I'm trading. I just get in my process, and I get into the price action, and I trade it. And if scale is justified, I scale up. And some days, look, there's days I've made $1,000 in one trade, a ledge break, with a 3 or 4 or 5 lot, in the minis, and boom, you catch a quick good move and you make $500, $1,000. That's happened to me. And there's other days that I've just traded micros, and I kid you not, I've had $1,000 days trading one micro just by scalping it. It adds up. Look at yesterday. The biggest trade we had was $37, and if I kept doing that easily could have been $1,000 day. So you have to look at this scalping approach as being very transactional. It really is, and it's very important to get out of the idea of thinking in terms of price points. That I'm buying this price or that price, and let the trading tell you where. Like right now, this 35 got. That liquidity up there got absorbed. It got bought, and we're below it now, but it sure looks like it's about ready to be a puke up. And so I bet we're going to have a nice long here. So let's watch it. That's typical. And if it can get above that, we'll have a spring. Watch right here. We're right on the spot. So all we got to do is break up another couple of ticks, and we'll see 37.5 real fast. And there we go. So not quite as aggressive as I expected it, but it went, 1, 2, 3, 4, 5, 6 ticks. So, again, that adds up. You can play those. Don't discount how much money that adds up to over time. It's significant. And this one's going to pop even harder here in a second. You can just see them sucking in shorts there. And now we're going to puke those shorts out. Watch. We've already puked some of them out. There we go. Okay, so there's 37. From 35, just like that, 2 points, totally predictable. And again, if you take that trade, the MAE would have been 0 or 1. It never went down. It just went up. It paused on the way up, but it never went down. Perfect example. And notice how I wasn't even paying attention to the range, but notice how that occurred right on the edge of the range, which is typical. Again, not because that's a good indicator and I should trade there, but because the way we're trading, the range is forming around those inflection points. Don't be backwards. Don't think that the LRC is telling you where to trade. The trading is telling you where the LRC is. Understand that. That's a critical point. Okay. Yeah, this stuff does work, JVC. Isn't it funny? All right, let's see. 406. We're going to do... I think this might be a good time to just do some scalps. I think we've discussed range enough. Have we? Do you guys have enough feel for this? Do you want to just trade it for a while and for the next 40 minutes or so, and then we'll trade the pre-open and the open 5? Any other questions about this? Any stuff that's not clear? Anything I can elaborate on? I know it seems less specific to some of you than you're used to. But look at that. Stops at the top of that last rotation. 0 prints, 3 levels. Those are stops. This is interesting, and that's right at 40. 40. Again, I don't look at price levels, but when a level gets revisited that we've been to a lot, and that's one of them, look at that right there. That does get my attention. Not to re-short or to re-long. It just means it's important. We're at an important spot. We have an inflection point. So this is worth watching. Gosh, my gut is that this is going to go up and take out shorts, but it could go either way. So I'm going to look for a trade here. Oh, do I want to get long here? Probably should, but it looks. Yeah. The long was 35, not here. So okay. It's not a short. It's definitely not a short. But the long was when I started explaining it at 35. This would be chasing that long. It could continue to assert itself, but it's kind of a risky spot to do that. So let's just let it play here for a little while and see if a better setup comes. It's not a short. It's definitely a long or a sit on your hands, but it's a risky long to play. So that's why I'm not going to do it. If it shorts, if it sells back down to that 35 area, that's an interesting long, because that area got really aggressively bought, and you can see nobody's aggressively selling here. They're just trying to figure out if it's still going to go up. So if it was aggressively getting sold, we'd be going down, and we're not. This is trading on the buy side. So it feels like we're about to get a burst up, but it's a little too hard to manage risk here. You have to manage it down to at least 35, and that's 3.5 points, just too far away to be long. A sudden push down to 35, I might just buy. A lot of times you'll see a market sweep down to a buy point like that. And so that's worth watching here too, if we revisit this 35-ish area. Okay, we might be about to do that. See how every time we start to push down, liquidity kind of sneaks underneath us? That's what I call a stealth bid. See how it's not even letting it really pull back. It's guys are saying, okay, it's starting to pull back. Okay, I'll start nibbling here. That's kind of what's going on. And so, it's trying to lure people in short, I think, but my gut is that it's more on the buy side than the sell side here, but it certainly is risky down to 35, maybe 32, which would even be better places for that idea based on the liquidity here. So, all right, I'm going to take another quick break. And if you guys need to, go ahead as well. 18 trades, 2 losers, and 16 winners. Good job. See, that's what you can do. And again, I'm going to do less talking and more trading on the next segment for sure, the open 5, but I may start doing some more here. We've got a good hour, good 50 minutes left, and this will be a good time to look at examples. So let me take a quick break, and then we'll come back and we'll reassess. And by the way, I do the stop, look, listen, smell thing every time I come back to the desk. So I'm leaving now, and everything that I think I know now, I'm leaving at the desk. When I come back, it's like a brand new trading day. So everybody, let's take a quick break. And then I'm going to come back as if I just walked up to my computer first thing in the morning. And we're going to literally start all over like we just sat down. So break for 5 minutes. Then start over drill is what I call that. So see you in a few. I'm reading your comments, JVC, and I totally agree. There's a thin line between bad habits and good scalping.
Yes, that's a good way to put it. It really is. It's an edge, and you walk it.
You do, and that's why the first thing I always do when I sit down in the morning, and you guys that have been in any of the boot camps know this. I haven't really talked about it in this session, but I question my competence. How competent am I right now? Because depending on how much sleep you get, how much coffee you have, competence varies, and so sometimes you just make a lot of wrong decisions in a row. And you have to, are you being a monkey, or were there good setups? And you have to really be ruthlessly self-critical, as we say. All All right, but we have a beautiful range. Look at this. This is what you want to see. It's settling into a really nice little range. So this is the kind of stuff I wouldn't necessarily get into this with too much size, but it's definitely tradable. This liquidity underneath us probably wants to get filled, and we probably want to go down. So, maybe the bottom of the range, 35, 36 is an interesting spot. If we can trade through that liquidity and then see what happens, we're trading in it right now. So, it's old demand that we're eating up, basically, looking at the emoji zone there. Okay, we traded through it. So if he really wanted to get filled, we should see it assert one way or the other. And there we go. So that guy was actually looking to sell. That makes sense. And push down. And now it might be a good buying opportunity now that has happened. That event is over. So let's watch it. Yeah, now he's still doing that. He's putting liquidity into the market and then he's getting filled. So I'm not so sure we're not going to go down a little more. 35 would have been the place I would have maybe nibbled, but I'm not seeing the aggression coming in at 35 at the edge of the range. So I'm going to stay out of the way there and not trade it either way. So I come back to my computer. It's a brand new day. What's going on? The first thing I do is I just kind of take a quick look at the structure. Is there anything I need to know there? Stops at the top. Double, two rotations had price rejectors. Right now we're in the middle of the, we're just below, actually we're below min delta right now. So we're a bit of a sellers in control situation, but in general, we're in the middle of the range, which makes sense. That's what we're seeing. And if I look at the price action in the short term, is there anything that jumps out at me? High volume reversals are the trades of the day. Does everybody see that? It'd be really nice if you could catch a 10-point trend move, but good luck. It's bouncing too much to manage risk for that. Or if you did it, you didn't manage risk well and you got lucky. But having said that, every time we've put in a definable low, we've had a wicked high volume reversal for at least, decent amounts of ticks. So that's kind of the tactics to be looking for as the momentum picks up going into the open. Are there inflection points we can reverse off, or are there levels that it just clearly is telegraphing that it's going to take them out and we can go with that momentum? Right now, I'd say the lean is slightly to the downside, but not tradably short. That's how I interpret this. I think we're putting pressure going on the downside. We are pushing down, but there's enough liquidity under it, and they're stepping up to buy enough times. There's a couple little bursts in here that it's not clear that we're just going to go down here. So, we are heading down. The direction is down. That's always the first thing you look at. Which way are we going? Down. The momentum. It's okay, but it's sporadic. So. How is it changing? Well, it's not. It's still sporadically down. So, very crappy short setup. Sit on your hands. So anyway, this is what I'm going to do the remainder of this session. So the next 45 minutes, I'm just going to talk and trade, and I'm going to read the price action stream of consciousness. And if we get bored in ES, we'll go to NQ. If we get bored, we'll move around. I'm just going to have some fun here. This looks like a long. I might take this long. Let's see. Buyers coming in at the bottom of the range. Yeah, but it's a sucker's long too, because it could puke out of that real fast. So no, we're not going to take that trade. Yep, there it goes. It's puking down. Yeah, you know what? Back to what I said a minute ago. I like high volume reversals. If we can get some momentum going down to reverse off of, that's the trade to take. So let's, again, what JVC said a minute ago about being patient. Absolutely true. You got to be so patient to be a good scalper. I watch movies while I'm scalping. On one of my other monitors, I watch movies, or I watch Formula One races, Formula E races now. I've gotten into Formula E. And, and then when the trade sets up, you already know what you're going to do when it gets there. You're just waiting for it to happen. I'm waiting for an aggressive move down to buy here. And, I might end up selling into that aggressive move down, but I just don't see anything telling me that the bottom's going to fall out of the market here. It looks like we're trading orderly toward the bottom of the range. So a high volume reversal would be a really nice setup. Or a ledge break would be a good setup, but we're too far away from the ledge right now. It's all the way down at 22 and we're at 32. So that's not in play. Remember, what are the rules for that setup? We have to be near the ledge. We're not. We're going that way, but we're nowhere near it. So we're not trading toward that. So basically, this is a kind of sit on your hands there. Maybe let's pop over to oil, see what's happening in oil. I'm just going to, when I do that, I just change my bottom to to see it. Oh, oil's sitting right at that 99 again. Let's look. So again, first thing, what's it doing? Well, it's at the highs. That's interesting. What's the price action? Wow, it's really sporadic up here. That would be hard to trade either way. If you were long, for the break of 100, you'd have to put up with, 3/4 of a point of risk. That's $700 in oil, even though it's going up and it's likely to break this ledge to the top. These pushes down. Look at that. There's big sweeps down. So there's just no trade in oil. Way too risky to trade that. I think gold is still a good momentum trade, but I'm not watching it because I'm long the ETF in gold. But let's just go have a look at gold too. Gold looks like it might have put in a short-term top. 1930 has been a level it's traded off of before. Look at that. So if that's the case, you know what? If I see that, I'm going to protect my profits in my my double gold ETF. As soon as we open, if we open at this area, I'm going to put a take profit stop under that because this could be the top of the gold move. Whatever's going on in Ukraine is probably priced in more or less at this point. So that's interesting. All right. So meanwhile, back in the indexes, they continue to be where the good trades are. Oh, we're at 30 again. We might have our high volume reversal coming. This is still a horrible short trade. It's just drifting down. And these are the worst trades to be in as a scalper because you can't manage risk. It's vulnerable to pop the other way. And you get profit over time, which is the wrong answer in scalping. In scalping, you want profits quickly and you want to get back out. So sitting in trending trades as a scalper is a really bad idea. You're much better off going in at good points and grabbing, breakdowns or pops up within the trend. Don't try to stay in trends as a scalper unless you're scaling in and out of a position and you have developed the skills to scale, which, as I've said several times, are a whole additional skill set on top of learning to trade the price action. So interesting spot. 30 has been along before. It looks like there's some liquidity there. It got bought. You could have played that. You could play that long. It was right on the bottom of the range. But again, this still feels like, it wants to go down, pushes up or getting sold. So I would really want to see a nice high volume reversal. And the best example of that would be if we do, in fact, take the ledge out at the low. We're still too far away, but that would be the ideal right now, is a kind of high momentum move that takes out the low and then stop short. I would buy that with everything I got because, odds are you'd catch 10 points on that trade because you're catching an extreme. It's asymmetric as hell. This spot right here isn't. This is a long, but it's not an asymmetric long. It's a dangerous long. Because you're going with this liquidity and the bounce off of 30, but we've seen some pretty good energy down. So if you're doing that, I would take profits very, very quickly if you're trading those longs, like you've seen me do. 3, 4, 5, 6 ticks. No reason to try to get more than that. You can get those over and over again, so don't risk trying to get more. If you can protect it and get more, by all means, that works. You can get a stop between you and the current price and your entry, but that's pretty hard to do when we're moving quickly. And we're not moving that quickly right now, by the way. This is predictable price action. So, boy, and that long off 30 would have been a nice one now that we're back at that 35 inflection point, but never shoulda, coulda, woulda, Don't do that. Just say, all right, I read that one right. So I'm tuned into the market. My radar is good. My antenna are reading the market well. So this is a good time to just be patient and wait for the setup and then stop talking about them and just trade them, Jeff. What Elena just said in her second paragraph is so smart. Because you lose the good entries due to overthinking, and then you're impatient and you are FOMO-y, and then you chase them. That's exactly what new traders do. And that's why you have to be really deliberate about where you're going to play and why you're going to play and how you're going to play. And if you're scalping, remember there's 3 rules. Good trades work right away. Always take profits. Don't lose money. You're looking for very fast, small winners over and over again. You're not looking for big winners. Big winners are dangerous when you're scalping, particularly if you're trying to pass an evaluation where you're using a trailing drawdown. You don't want big winners. You want lots of little winners. So the drawdown doesn't bite you. So that's another critical point. If you haven't taken the Getting Funded courses, not only is it a good trading technique, but it's good risk management, therefore good getting funded technique to not look for big winners. I know that sounds stupid and it sounds opposite of, let your winners run nonsense, but I'm not saying don't let your winners run, but I'm saying, it is a much more intelligent trader that takes lots of small profits and doesn't lose money against a trader that has a big winning position that they had to take risk along the way to take. That's just no contest. The person taking small winners will win over time in that scenario, without exception. Yeah, I've done those before, JVC, evals for scalping and evals for just scalping an instrument. For example, in December, I was practicing a lot of risk management. And by the way, oil took out that $100 level that we were just watching. I'm just watching it on my other monitor. So that trade would have worked nicely. But, again, the risk was really high to take it. Look, it punctured it and came right back into the range. So there's a perfect ledge break reversal. And in oil, those can be wicked. So, that could have broken the ledge and gone to 150 and come back. It does stuff like that. So you gotta be really nimble in the oil world. All right, so let's put this back on YM. This continues to be a sloppy long here. So now I'm looking for maybe another place to potentially be short here at the top of the range, now that we're kind of drifting back up to this 40 area that's been sold a few times. So that's not because it's been sold a few times, but because we're there and it's been in play. I'm going to watch it. I'm not going to assume it's going to get sold. It may not. It may actually get bought, but it's a great spot to play. The odds are really high. Again, we're at the edge of the range, and what does that mean? It means 96% of the time something will happen here. That's all. It doesn't mean we're going to go back in the range 96% of the time. It just means we're at 2 standard deviations of the short-term price action, which means, if it continues from here, it's a black swan. It's unusual. And so that's certainly tradable. And if it doesn't do that, odds are it's going to drift back into the range, which is also tradable. So let's just let it do what it's going to do. The trick to doing good scalping along, your point that you just made about doing an eval, JVC, is that's actually good from another point of view, that it can be very dangerous to mix scalping setups and structural setups in your head because the risk management is so different. And so I do that with my accounts. I have accounts I just scalp in and accounts that I trade structure in and different instruments. And I like to do that because it's a really good way of understanding what your mission is at any given moment in a trade. Because if you don't have that really clearly delineated, it's real easy to mix up your objectives. And don't let a scalp become a structural trade because you entered it poorly. And that's what people do all the time. Well, I'm already in this, so I might as well let it play out. That kind of stuff. Don't do that. Just say, oh, I screwed up. I'm out of here. Okay, look at this. So 40 did, in fact, get sold. We didn't even get quite to 40. We got to 39 and change there. But this is getting a little erratic again. So that's interesting. Something must be going on in the news because we're getting a little bit of new chop. When it just suddenly gets choppy like that, that's usually news. And that's one of the things that I'll look for to stand aside for a minute. If there's a sudden burst of volume going both ways. And this is picking up a bit. But I also have to point out that the overall volume so far is still relatively low tonight, which is typical. So this isn't like real aggressive, whatever it is. So, boy, what are we seeing there? This feels like a long here, but not yet. And this feels like it's going to set up another really good long. We're not quite at the edge of the range. I see the liquidity kind of teasing me down here at 32. So 32 and a half is probably the quarter that's in play now. So that's not a bad spot to throw an order and see if it comes down and gets me, which is right where all this liquidity is. And we could do the same thing with 30. And notice how I'm a tick or two off those sometimes. I'm doing that just to kind of front run it a little bit, like that. So, so what I'm doing here is I'm kind of staking out spots I might play if it were to come down there. Assuming it came down there and behavior didn't change, it didn't get real aggressive. If it did, I'd get out of the way. And likewise, I like this long. I just don't want to be the sucker buying the top. I do like this long though. It's got good energy here. It looks like it's going to trap the shorts and pop up through this liquidity. And it's starting to do just that. Tricky spot though. It could do this again like it just did where it pushed back down to 35. 35 might be worth a play now. I didn't want to try it before, but now it seems to be a little bit more rigid. Yeah, we're going to break 40 here. We're going to puke 40 to the upside. Watch. Not going to trade that, but I might fade it. I might sell it once it pukes. This looks like it's going to puke up. We have absorption going here, and yeah, okay, I tried to puke and it didn't get anywhere. This could be a really good short here. Let's wait and see if it plays out. It's asymmetric as hell, that's for sure. If it's a short, you'll know if you're wrong, but you could be really wrong really fast here if this continues puking. So I'm sitting here on the market order short button, seeing like if we can get 42.5 or maybe 44 and then get a reversal. Right now it's still going up, so I don't want to get in front of it. Okay, there's 43. Some sellers there. We're right at the edge of the range. There's no supply up here. I'd rather there was some supply there. There's demand under us. Be careful being short. So now it's actually long. There's the puke. Okay, we finally got the puke of those guys that sold there. Finally. And it's right up here at around 50. Tricky spot. Gosh. Let's watch this for another minute. It's still getting puked. So, it's a very dangerous long is what it is here. So I'm sitting on my hands waiting for the high volume reversal that I keep telling you guys I want to play. And it might be coming right now. Watch the LTQ, get on the sell button. Low volume node here, danger. That's the POC right on 50. That's also a big delta. I'm going to take that trade and just see if the first chunk of it works. See if we can grab some ticks just to I'm sticking a toe in the water just to see if I'm reading this right. Okay, that worked. So I'm reading it right. It's just going to be a matter of getting entries. So, and that's going to be really hard to do up here because it's moving around a lot. So that we're not going to trade it with the minis. We'll go for a block of micros here. See if we can fade this at the right spots. It's going to be tough to do. It's going to try to push up again right here, I think, on the 42.5 quarter. Or the 40 quarter, maybe. Look at the flip down here. It's the order book is rolling over. We went from a bunch of selling to stacking up on the other side. So that's in our favor with a long idea too. I think this is a great long. Just don't like this spot. No, further down's better right there. Maybe there. See if so this is an example of working the range and letting it come to me. I'm not convinced this is a short, but I know if I get a fill here, I can probably get a couple of ticks. So that's unless I get swept, which is possible too, which is why I'm doing this in micros, not minis. But I think this is ultimately going to continue up. This is the kind of momentum I want to join if I can get a good entry. So that's what I'm trying to do. If nothing else, I might be able to grab some ticks. Scoot that one down. Boy, this could puke down too. So let's just see if that works for that one. Notice how I just did a short trade a minute ago. What I'm doing is I'm trying to play both sides of this, which is always a tricky thing to do. But I think I'm getting the read right here. This could be wrong. This fell. I'm going to cancel that one. Nope. I don't like that there. I like it lower down, but I don't think it's going to high volume reversal off of 42. I think it's going to drift down lower before it gets bought, if it gets bought at all. So it may get bought right here, in which case I was right and I just wasn't aggressive enough. But again, notice what I'm doing. I'm not judging what my results are or my read by how much money I'm making. That's resulting. That's what you don't do. I'm judging it by, is what I'm seeing, what's happening. Am I reading this right? Because I'm reading it right. I know I can make money with it. But the first question is reading it right. And you never judge your performance or your skill at executing a strategy by the performance in the profits. Those are two different things. And really important to understand that. Okay, this again looks like a great spot to be long right here on 42. I'm going to just take that and see if I can get some ticks just to prove a point. we're going down, but I can get ticks here. And sure enough, all right, it was a 2. There's 3 next. Come on, give me 3 ticks. Should I take 2? I should take 2. Okay. Why'd I do that? Just because it wasn't giving me 3 right away. So, I'll always take 2 or 3 real fast rather than losing any, because, that adds up over time. I showed you that yesterday. And, if you do that in the minis, it really adds up. But you can do it in the micros if you scale them up, and trade more than one when that's appropriate. But again, at the moment, what I'm doing is not trying to make money or pass my little eval. I'm trying to demonstrate technique to you guys. Okay, there's a push down. Okay, that's what I want to see to buy. I want to see him push to the liquidity, and then I'm going to join it right there. Come on. Fill it. Come on, fill me. All right, we got the fill here. Let's, again, just grab ticks quick on these. So again, just you can do this over and over again for 2 or 3 ticks. And my MAEs on all of these are 0. There's been no MAE on any of these trades, and we've been in them for 3 seconds, 8 seconds, 8 seconds, 15 seconds. You get my point. And they're all winners. Every time I do it, my equity is increasing. So again, I'm not saying, I'm going to get rich making $3 at a time or $5 at a time. I'm showing you that, with 10 of these, that's 50 at a time. And it's the action here justifies that. And you could be doing this in the minis too. It's a little bit volatile for the minis because we've had some big sweeps. That's the danger. Let's say you were doing this up here and you got caught in that sweep from 45 to 41. That's a 4-pointer, and that's a $200 loss in the minis. And, there's nothing you could do against it. So you're better off, with 5 micros and, just lower that dollar risk and play more often in this volatility. That's the moral of the story. Hang on. I'm walking away from my desk for a minute. All righty. Dumping the coffee out before I spill it again. Notice how the market is not trending. It's just working this range. And just by trading the range, you could be making money now. And the market literally isn't going anywhere. This is all the people on the Facebook Top Step group saying, yeah, the market's choppy. There's no trades. And meanwhile, I've put up 7 winners in a row here. And that's my point. Again, not, that I can make $40 doing this, but that this is a really predictable way to scalp. Does everybody get that? Are there any questions about that? This is kind of the crux of the range conversation that I wanted to cover today. Let's see. Cool. All right. I see some good feedback, but it's relatively quiet. We're probably starting to lose people. So here's what we're going to do. It is 4:36. This session, now we're pushing it. Every time I start to wrap this session up, it gets interesting again. Here's what we're going to do. The next session is scheduled to start at 6:15. I'm going to call an audible for those of you that know American football terminology. And here's what we're going to do. JVC, if you're tuned in, if you could post this in the Scalpathon as I say it so that everyone who's not here right now will know what's going on. What we're going to do, rather than keep this session going till 5, which is like another half an hour, I'm going to wrap this one up early and I'm going to start the next one earlier because I think that's going to be a really good pre-open, open 5. So rather than waiting till right before the open at 6:15, let's start that one at 6 a.m. So we're going to start in about an hour and a half or so, maybe even a little earlier. You know what? Let's call that 5:45. So we'll get the news that's coming. Remember, there's a couple of economic announcements coming up right around then. The Red Book's coming out at 5:55. And then we can see the beginning of the pre-open, which is the pre-open really is in earnest the half hour before the open, so 6 to 6:30 my time. So starting at 6:15, there will be a little late. So what I'm going to do is I'm going to call an audible on that. We're going to start that session at 5:45, and we're going to end this one in about 10 minutes. Okay? So if you could please post that. And real quickly, I'm just going to update this, and so I can post this too, so in case somebody sees it. So let's see. So this one we're going to end at 4:45.
And I will not be there, of course, because I've got my 3 sessions today.
Right. Yeah. You're doing all the other live trading for TRG. I get that. And so let's see. This is 06:45. Okay. And then we're going to start this one at 5:45. And we might go longer than that. So, and this will be, what am I? 5:45. Okay. Cool. All right. So this one is over. We will strike that guy through. And then I'm going to post this puppy, and you can post the explanation. I'm just going to update the schedule. Okay.
No problem. Yeah, I already posted it.
Cool. All right. God, I hate you, Zoom. Zoom, the latest thing they've done in their code is they block the clipboard. You can't see your clipboard when Zoom's running.
What?
Yeah, I know. It's not just ridiculous. So it won't show me the clipboard, which I have something on now that I want to paste, but it won't let me. Let's see if it'll just work. If it should, but yeah, normally if I go to the pane over here, I can see the clipboard and see what's on it, right? It won't let me. It's not doing that. Zoom it turned it off. Just classic Zoom. So let's see.
I didn't even know that was a feature.
Oh yeah, it is. So this should be my image there. Let's see. Yeah, it is. So yep. All right, so we're now updated with the schedule. You posted that announcement, so we're good. We don't need this anymore. We don't need this anymore. Let's go for, we'll go till 4:45 and see if we get any other trades. This is a tricky spot right here. Because we've kind of been pushing down off these consolidations, and we're not near a quarter, and there's no liquidity. Look at that, the liquidity disappeared. There's nobody under us now until we get down below 30. So everybody is backing away from the trade right now, and this is one of the reasons this time of day is a little tricky, but it gets a lot better again right before the open, and then of course at the open if there's a momentum trade. So this is kind of the time that I tend to trade less. This kind of 4 to 5. It's kind of no man's land. As we haven't opened up yet, and Europe's been open long enough that, that we have a decent idea what's going on in their markets. What time is it in London right now? It is, it's just after lunch. So, they've had a chunk of a session. So, anyway, I don't see anything to trade here at all. I'm looking for a setup here, and I don't like anything. I don't like short, although it's going down. We might get we could get a low here with a high volume reversal if we can go a little further down with this momentum. We've got good momentum. Remember, to get a high volume reversal, we want to be going one way with momentum, because the reversal is going to be the trade of that stopping. So we're looking for the delta to change. Okay, this is a really good opportunity to catch an example of a high volume reversal right there. That's the spot. So risk is low right here to try this. We might miss it, in which if we're wrong, we get out of the way quickly, or if we think the area is going to hold, we could scale it. So what do I think is happening here? It might be holding, it might not. It's erratic. Do I want to get out of the way, or do I want to scale into this? I like adding one right here. That gives me enough that this trade sets up to work really nicely. So here we go. Okay, we're in profit. Take some off. Let's see if we can protect this. Maybe catch a little runner off that low. See, that's a perfect example of scaling into a trade at the right time. I did that perfectly, live even. I added to a loser at exactly the spot I should have, because it wasn't a loser. It was a better entry of the same idea. Does everybody see that? That is a critical point. Critical point. Don't need it. So I'm trying to catch a runner here. I've got some great ticks. I'm long from 31, and we're at 31 quarter, and we're at 33.75. I took profits on one, and I'm protecting the other. I stop at 33, so I'll get at least my 8-9 ticks here. But I'm thinking this trade could go all the way to 40 if I don't trade it too tight. If I give it a little room, I could protect this one, and we could catch a really wicked little winner here. But it's sweeping down. That's bad. So I want to protect that. So I'm going to tighten it up. I don't want it to sweep and take my profit back. So I want to keep it tighter. And we got filled. So that's nice. That was a nice, 11 ticks. I'll take that all day long. And we were in that trade for a whole minute and 18 seconds.
That's a long one.
I know. Any questions about that? That was a perfect example of of number one, a good setup, number two, a setup that justifies adding to a loser, quote unquote, or actually scaling into a good idea, because the idea was long at 30. And my first one got filled when we paused at the quarter at 32. And then it started to push down, but the push down was weak. It wasn't aggressive. And remember, I was watching the bar by bar delta, which continued to support the idea that it was on the buy side. So that was a good idea to add another one, which made that trade even more profitable. And it protected my risk because the average came down. So I don't ever add to losers, but if adding to the same idea at a better entry gives me a better average, then by all means, I'm going to do that. But those are totally different things. And, and if you're one of these, if you're just memorizing memes, never add to a loser. Well, no, you shouldn't add to losers. But if you're losing because you entered early and now there's a better entry of the exact same idea, then you have it backwards. You're actually getting a better entry and you jumped the gun on the first one. And this is where you should be trading. So you should be even more aggressive. So you're not adding to a loser. You're actually getting a better entry of the same trade. And the way you know that's true or not is when you do that, it should work instantly like it did for me. The adding to it should get you to profit instantly or very soon. If you're adding to it and it's continuing to go against you, then you're adding to a loser and you got to get out of the way because your read is wrong. It's that simple. So that was a really good example of that. Again, not a good example in the sense that we watched Jeff make $500, a good example that you watched a perfect execution of an idea that I had predetermined. Here's what I'm going to do at this price level. And then we did it and it worked perfectly. So that the way you evaluate that is you say, I had a process that was taking advantage of my edge to give me a spot where I'm more likely to make money than lose money. And I did that and I got back out of the market quickly with my money. So the way you interpret that performance is perfect. We don't look at how much profit we made at all. It doesn't matter. The performance was good. That's scalable. That's repeatable. If it only made $1 or if it only made $5 or if it made $500, that's irrelevant. It's the execution of the idea that we're practicing. Critical point. Okay, any questions? We are at 4:45. Burning desires going once. We're going to close this meeting out and reconvene in an hour at 5:45 for the pre-open. And I promise you, this will be fun trading. I'm going to trade the open 5, whether it's a good open 5 or not. We're going to trade it, and that's the most aggressive momentum trade you can do as a scalper is trading the open. So this will be a really educational session. We're going to do a couple of them. This isn't the only trading the open I'm going to do, but I encourage you to be there this morning. It'll be a short and fun one for about another hour and change at 5:45 till about 7 or so. All right. Any burning desires, last questions, comments, anything that I can answer before we leave? If you don't have a jigsaw tool, how can you see the liquidity below? Do you have Sierra chart, Elena? Thank you, Jose. I appreciate the feedback. Yeah, you can get templates. I think, correct me if I'm wrong here, JVC. I think Ticino Trader has a really good kind of bookmap looking template that he sells.
Yeah, if you want stuff that looks like other platforms, Ticino, Ticino, he is.
Yeah, I'll get the link
for that. He does an amazing job of making Sierra look almost exactly like all kinds of other platforms. But the bottom line is that Sierra does have a quote unquote heat map. They call it something different, like historical. Historical something, I forget, but it's we can discuss it in the pit. Certainly feel free to ask.
Perfect. Okay. Yeah, this guy sells templates that it'll save you hours if you're trying to build something like that. I'll stick this
like
link.
$1 a month in his Discord or something, and you get all his. It's ridiculous value. It's good stuff.
Yeah, he knows the market really well, and his skill is putting together these tools. And he also has education and whatnot that I'm not that familiar with what he does there, but his tools are definitely useful for stuff like that. Good question. That and that's helpful for a lot of people.
And that Jose just provided the name of it. Market Depth Historical Map is
okay. So that's the tool in Sierra. Just real quickly.
Okay.
Yeah, I'm just going to look at the study. So what's it called?
Market Depth Historical Map or
Graph. There it is. Yeah.
Graph. Yeah, I was going to say, I think it's not map, graph. Yeah.
Yeah, that's it. Market Depth Historical Graph. So there you go if you want to try it that way. But remember that the key to what Bookmap does and what Auction Bis is doing here is it's not just the history. It's tracking the history of the depth, but it's also showing real time. These circles are traded volume. And so we're seeing the juxtaposition, if you will, of traded volume on top of liquidity. And that's what makes this kind of powerful. Bookmap does the same thing, but they charge like $99 a month for it. And that's all they do. You saw examples, by the way, of how quickly I can move prices just by clicking on the price. I did that in all these trades I've done. That's the other reason I really like Jigsaw for execution. And by the way, it's important you understand I'm not doing it right now, but I can be trading my Sierra chart feed, my AMP Denali feed through Jigsaw. I just have to connect to that data, and I'm just not connected to it. That's another thing I like about Jigsaw. And I'm not making a Jigsaw commercial here, but right now I'm connected to 4 different feeds at the same time, and I can just in a second switch to one account or the other. And don't need to do that because I'm trade copying. We're running in an eval and cash and another cache at this moment, but it's powerful. It's flexible. Okay, cool. Thank you. Yeah, there you go, Jose. Yeah, €2 a month. I mean, that's a no-brainer. That's a cup of coffee, right? All right, everybody. Thank you. Good session. I hope you learned something, and I hope some of this is starting to sink in. And we'll see you in an hour for what should be a great, fun Open 5 pre-open session. And we'll take a little more risk. We'll play some trades and see how I can do scalping that. So I'll see you guys in a little bit. Thank you, JVC. Have a good session yourself this morning.
All right, and guys later.
Yeah. See you guys later. And if you have any questions, stick them in the pit. We have a dedicated Scalpathon questions topic now. You can post whatever there. Thank you. We'll see you later.